Morning, everybody. How are we all doing? Morning, Themba. Morning, Stevie. Watching the DAX this morning. Nice big push down this morning. I've just taken some profit here, a little bit of profit on some of my DAX positions. Morning, Yanis. Morning, Ladder. I had, as you know, I'm building a position on the DAX short at the minute. I had a few other extra positions in scattered, which I've taken off this morning just to bank some, just in case we get a push for the highs this morning. I had a little bit too much size on the DAX. So I banked a little bit on that this morning. Nothing much else has moved. Euro US dollar's in profit. New Zealand yen's in profit. Pound US dollar, I've got a couple of profits. Aussie New Zealand, I've got a little bit of profit. This thing's just going sideways. This is doing my head in, this thing. Make your mind up. Like, today, please. Yes. Let's go. Morning, Frank. So yeah, hopefully today, we had the Wyckoff Spring here. So hopefully today is the day we actually get some bloody movement on this thing. It's been sitting sideways for ages now. So yeah, so that's where I am at the moment. Pretty much the same as yesterday. I just went into a bit of drawdown and came out of a bit of drawdown, in, out. It's usual malarkey with the position. So just waiting for stuff to move. But there's nothing catalyst-wise today apart from talking heads. It's today is this conference in Zurich. Oh, no, hang on. On global risk, uncertainty and volatility, blah, 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 blah. So all the bankers basically are going to be taking it in turns talking. So I don't think there's going to be much come out of it, to be honest, but you never know. So I don't know why Low is red and everybody else isn't. He's not. One's more important than everybody else. But so we got that going on today. I don't know how long that lasts. And obviously it's the midterms. So Trump's running. Well, not running, is he? I don't follow American politics, but I've been watching the news this morning, and obviously, as usual, the news play up the. He's going to make a major announcement, which obviously is going to be him going for the elections. But you know, they always play it up, don't they? To be, oh my God, it's going to be an absolute mayhem, and Trump's going to incite riots and all this sort of stuff, and you just never know what's going to happen. So you could get some volatility off of that. I've no idea, but we'll see. So that's going on today. No news at all tomorrow, and then they've got CPI on Thursday. So that's the only thing that is actually going to do anything in theory this week. So yeah, flat. Aussie New Zealand's going very nicely this morning. Just needs to break out of this range. If we can just get out of this range, we've got half a chance of getting somewhere, haven't we? But that's an ADR hit. So happy midterms, Diamond. Yeah. Well, I don't know if they'll be happy or not. So there's not a lot to look at today. I went through all the pairs obviously yesterday. No ADRs, no weeklies, no monthlies. Flat. No RSIs on 4 hour, no RSIs on hourly, no RSIs on hourly 14. So the dashboards are all flat. Yeah, I mean, there's a lot of stuff that's like this, isn't it? It's just flat. And Friday we had that massive movement all over the place with the US dollar. Everything went nuts on Friday, and obviously got massively extended. Everything was lit up like a Christmas tree, and now obviously that extension has flattened out. So everything's flat. So at the moment, yesterday we had a bit of an accumulation day across the board on most things. The only thing that moved yesterday was the pound. So we had a big, strong move off of the pound yesterday across the board. Not quite sure why we got a big, strong move on the pound, but we did. So I actually I got a position on manually, and the EA got me in one up there as well. So yeah, we had a big So it's just about an ADR push. It wasn't a big push. It was, what did we get to in the end? 250 on 188. So what's that? 125, 135, something like that. ADR. So it's a fairly decent push. We're really close to this peak here on pound US. So we are coming down during Asia. So it'd be interesting to see what they do in London. When you see spikes like this, you don't often find, I don't think, there's much liquidity sitting above there. When it's a spike, it tends to be some kind of news event, and lots of orders put into news tend to be scalping short term rather than longer term positions where you would typically stick a stop. So I'm not convinced necessarily there's a load of money sitting there. So they might not go for that. So I think the thing that's going to affect today is going to be what happens with these midterms and whether or not the market actually decides to do anything today, because there's a lot obviously going on. And if we do, we should hopefully get some strength coming through in the US dollar, which will obviously bring this one down. So it's difficult to tell, but the pound is certainly not as strong this morning as it was yesterday. As you can see, it's all starting to sort of roll over this morning, but obviously London's just about to open, so we'll see what happens there. So DAX is just opening. I've got my machine. It's been running for 4 days now doing back testing. I've discovered a bug with the price action tool. Well, it's not really a bug. It hasn't drawn in the opening lines. The opening lines are drawn in on initialization of the EA, and obviously the EA isn't being initialized every day because it's been running for 4 days, my machine, doing analysis and back testing. So, but that is market open. So we'll see where we go. We're having a little bit of a push up at the open. Let's have a quick look at the US indices. Sorry, this is the open here. So DAX yesterday, we had another bull day, but not very convincing. So we tapped up into the 200 moving average on the daily. We took out this high. Remember, I put this high in yesterday as a major level. We tapped into that and we came down nicely during New York. So we did get rejection at that level on the DAX. This morning we've opened up without a gap and we started to push down quite hard. US indices look like they are starting to push down fairly hard as well. I'm just going to get some short. Wow, there's a load of sell orders coming in this morning. I'm just going to get a couple of sell orders in. This is on futures, by the way. About tons of sellers at the open. Oops. So yeah, I'm looking basically for down day to start. So looking at the DAX, obviously we kind of paused at the highs. So it'd be interesting to see what they do today. We've opened and done nothing but go short, and there's a lot of short orders coming in, a lot. So I'm looking basically today, see if we can get some kind of bearish candle in and get this move started, which is what I thought was going to start down here. NASDAQ, a little bit of a push up again. So we gapped down and pushed up. S&P, same sort of thing. Dow, same sort of thing. Dow's a lot stronger. So we've got highs coming up on the US indices as well, which could potentially be targets if it is going to push a little bit more. But they're out of whack quite a bit now, these indices. As you can see, this always sort of happens around earnings. There's your high there, really. Because obviously different sectors, different companies are coming out with different earnings. Some are winning, some are losing. You get different sectors moving at different rates, and you get a lot of sort of divergence with the indices. So they will all start to come back into line. But at the moment, obviously, we've got some which have got a lot further to go. So you kind of need to treat them each individually at the minute. But they are obviously all moving in sync as usual. So looking for downside today. We've had a couple of good up days. We are still obviously in a bear market. I still like us to go down from here with another leg, but we will see what happens. Oil, very weird day yesterday with oil. Obviously, we had that massive day put in on Friday off the back of the non-farm payroll. Yesterday, we pushed up, we took out all that liquidity up there and then just ran straight back inside. And this morning, we basically just started to sell off. So not quite sure what's going on here again with oil. I think if you look at it on the 4 hour, it's still looking good. But what I was looking for yesterday, or what I'm looking for, is higher high to be put in here and come and test this area. So all we did yesterday was basically pull back. All we've done this morning rather, and yesterday's pull back. So we just got a reverse alert on the 4 hour there. So we got this support level today, these highs. If we can get down to there, and obviously we've got this propulsion gap here, which is kind of part of a 3-bar reversal move, really. But we've got this propulsion gap. We've got these highs. So this is kind of where I would like to start looking for long opportunities, somewhere around there. So just move one of these. Just put another one down there. So I'll take that high there, and you can see that's kind of around about the same area. So somewhere around the 90 and a half is where I would expect to start seeing some buyers stepping in. So if we do push down to that level, that's a good area to add or potentially get in if you want to get into oil. But again, you know, we're looking for this 100 to 110 a barrel by Christmas. So yeah, we've got plenty of time to get there. So it doesn't have to scream up. But you can see, obviously, the impulse pushes higher are much, much stronger than the pullbacks. You know, so it is, market structure is definitely there. So it's pushing, flagging, pushing, flagging, pushing, flagging. Yeah, so we should be, if we're going to continue, obviously, in that vein, we should be going higher. But we ran into a load of limit orders here, as you can see. So the limit orders just kicked in and we're like, nope, you're not going higher. So it depends how many buyers we got today, really, and how far the sellers can push the buyers back down before they step in and start the next leg up. Gold, obviously, we're in a prime spot on gold. Just about to get a reverse alert on the 4 hour. We just had one on the hourly, I think, this morning. Yeah. So yeah, lovely level. We're looking for gold to come down against the US dollar. We're waiting for US dollar to power up. Absolutely perfect spot to start shorting gold if you want to get into gold. I don't trade it myself, but that's where I would be getting in if I was getting into gold. We just about tapped into, on that first peak, the RSI extension on the 4 hour, and obviously we got it on the hourly off the back of non-farm payroll. So big move down, waiting for US dollar to power up, but we will see. Ladder, man, I missed the 4 hour short entry on silver. Well, you just better get one on gold. 4 hour short entry on silver. You might have a different chart to me. You might have some red candles in there I haven't got, but it's retesting at the moment, so got another bite of the cherry. You can start getting in now. Stick a pending order under that low and get gathered in when it drops. We go against your rule of never tracing a trade. So if you don't want to chase a trade, that's fine. It's always a good rule to have. But look at the grand scheme of things on a higher time frame and where you think you're going to go. Yeah. So if you've missed that, that's fine. It's pulling back at the moment. So you're not chasing a trade. If you get in on a pullback, you're not chasing a trade. Chasing a trade is where this thing screams down here and you jump in short, which would have worked lovely there, but you wouldn't do that, would you? Because, like you say, you're chasing a trade. But if it pushes down here like this and you go, oh, I missed that, and then you get that, get in there. That's not chasing a trade. That's entering on a retracement in a trend, which is fine. So you've missed that, but you can still get that, can't you? And you know, there's every opportunity it's going to go all the way down, isn't it? We're at the top, towards highs of range at the moment. So indices are flat by the looks of things. Look at that. What a pullback. So we've just tested yesterday's lows from New York. Obviously, it's not yesterday's lows, it is yesterday's lows of New York. That's where yesterday's low actually is. So let's see what we do here. Obviously, opportunity here this morning is for an opening range breakout. That's a hell of an opening range, isn't it? Obviously, it's sold off quite heavy. So that is a great place to start a short position. Stop above the high. If we're going down, add down there. See if we get that run to the downside. Aiming for something like 1976. Yeah, that would work. You got such a thing with this silver is, I mean, I very rarely look at silver. Compare it to gold. I mean, gold is getting a lot more. Obviously, silver is holding its value a lot more than gold for some reason. I don't know why, but you're in a very, very clear range here. This is a strong resistance, yeah. So you know it's held 5 times this level. This is the fifth hit on this level, and we've got the reaction. I would say you're heading down there somewhere, aren't you, at the moment? If we're going to continue the price action we've had since July, I mean, it's not going to get there straight away, is it? But we're going to stay range bound. Getting in here is a very good entry. Even if you get in now, depends if you're going to position trade it. Take an entry here. Take an add at ADR. You're only going to have 2 positions on. If then it proves you wrong and it breaks out, you'll have to deal with it. But you've got such a strong push there with no profit take move. It's highly likely coming down, isn't it? So this is a good buy, good sell area here. I'm short on the NASDAQ because I can't trade DAX on futures. But they're all going to do roughly the same thing. What am I doing a 1 minute chart? So good sell zone there. Got lovely rejection. Got tweezer tops going in. We've just completed a wick test. So if this is going to go short, this is a lovely risk reward short entry and an add. My funded accounts are all up to where I want them to be, so I can't trade any of those at the moment. I haven't got anything. I haven't got any funded accounts I can trade. I've got no evaluations on either at the moment. I ought to do another evaluation. I might try another company, actually. I'll have a look at that today. So looking at DAX for targets today, obviously yesterday's low is first target. So we've just taken that low and obviously rejected it. So it's either going to reject that and go for the highs, or we're just going to muck about and then finally break that and run for the lows of yesterday. So one of those 2 things is going to happen. Obviously, you've got an opening range breakout opportunity to achieve one of those. But if we run for those lows, we've got this whacking great gap down here, which is still orphaned. Yeah. So if you look at you look at this as kind of a massively exploded version of this, we had a push up, big push down, pull back, drop, and filled the gap. Yeah, so we've got the gap, we've got a push up, pull back, and then drop. So there's your drop. I think that's the sort of movement I'm looking for. So I've got a bearish bias today based on the gap fill. But obviously these gap fills don't always happen within a few days. Sometimes they do last a week or so, but most of the time within a week you've got the gaps done. So I'm hoping today we're going to get some sellers coming in. It was very promising at the open. We had a lot of sell orders flush in the opening cash balance, but at the minute they're struggling to take control back at the moment. So let's see what happens. Mohammed, are you in here? Don't know if you're in here, but you wanted me to talk through. Sorry, no, it's Mohammed. Yeah, you wanted me to talk through something this morning. You got a position in drawdown, you said, didn't you? Dealing with the emotional challenge, accepting a big red number on your screen and letting it go. I'm not quite sure what trade you're in, but if you're in here, brilliant. Let me know. If you're not, watch the replay. But yeah, dealing with drawdown. So if Mohammed basically has just started position trading. He's been trading with the market reversal alerts indicator using stop loss strategy for a while, and he's just switched over to try and position trading. And obviously, when you're position trading, the mentality, the mindset is totally different to normal. So what you're accustomed to as a normal trader is your P&L having more red than green on it. Your closed P&L, which is this. You're used to this being red, a lot of red, because you take a lot of loss. When you put a stop in the market, the stop gets taken, you lose. So you're used to losing 0.5% to 1% per trade. So your mindset is always chasing your losses. Any new prop firm recommendations other than my Forex funds? Yeah, E8. E8, fast becoming my new favorite, to be honest. Either E8 or them. Morning, Amit. So yeah, so your mindset has to shift from losing regularly, death by 1,000 cuts, getting those big winners or trying to get those big winners, to accepting drawdown. And the fear of blowing your account, I guess, is what everybody's worst case scenario is. And as humans we're pre-programmed to have this fight or flight instinct in us. So instinctively, we always go worst case scenario. We're thinking, if I do this, what's the worst thing that can happen? Most people are. So these numbers you see are scary, but what you have to do mentally is say to yourself, yes, I've got 5% drawdown on Aussie New Zealand, but look at Aussie New Zealand. Look, when I got into Aussie New Zealand, entered first position 3rd of November, where were we? 11th of October. Okay, so I've been in this for nearly a month, right? And I've banked profit out of it. Yes, I've got 5% drawdown, but I have put some of this into here, into this pot. So this is a winning trade at the moment. The fact that it's in drawdown doesn't mean it's a losing trade. It means that the trade is working. Yeah, we're waiting for the market to move. As a stop loss trader, if as everybody does, which is, in my opinion, a little bit too much, but everybody takes 1% risk per trade. If you have 5 trades in a row go against you, you lose 5%, don't you? What have I lost at the moment? Nothing. I've actually made money on Aussie New Zealand. Yeah, I've banked Aussie New Zealand and it's in here, and it's in last month. Lovely big orders coming in to sell on the indices at the moment if you went short DAX. So I haven't lost anything. I'm sitting in 5% of drawdown, and I will put more of this over there. Yeah, and build this bank. And your goal is to keep building this bank and worry about this when it gets to a level that you are uncomfortable with. And the level of comfort you have and everybody else has is going to be different. I'm comfortable with some positions going, I'm not comfortable, but I'm not massively uncomfortable being in 5. If I get into something like 6 or 7% in drawdown or 8%, then I'm getting pretty uncomfortable and I'm going to do something about it. But I'm looking at doing aggressive drawdown control on the Aussie New Zealand at this sort of level, because this is where I know I'm a little bit more wrong than I should be, and there's something fundamental going against me that I wasn't expecting. So this is where I start to deal with the position. Your level of uncomfortability, if you like, with your trades might be 2%. It might be 10%. But you're not going to know it until you get there. And the trouble with position trading when you first start is the first time you get into a trade and it gets to a level that makes you a little bit uncomfortable, you freeze and you don't know what to do. But what you need to do is, whatever pair you're in, and I don't know which pair you're in, go back in time and look at it. So I'm in Aussie New Zealand. Go back in time, yeah, and just scale out on your chart and look at where you got in. Me was up here on this bounce. Look at where you got in, look at why you got in, and then go back in time and look at what happened when these sorts of things happened in the past. So equivalent to that and that, I would say, is probably something like that. What happened after that? We went accumulation, and then we pushed. Yeah, you could class it as maybe that, and that. So let's say you went long there. You know, you're in drawdown all the way out here. Look what happened afterwards. Yeah. You got one big one there. Look what happened afterwards. Yeah. Look where we are now. This is the biggest of the lot. This is the biggest move down we've had on Aussie New Zealand in over a year. And I'm in it long. But go back and look at other charts, look at other time periods when we've had big, big squeezes and big sharp movements. Yeah. Look at this one. This is probably, what the hell? Right there. But this sort of move here is probably akin to what we're in now, isn't it? A very sharp drop, very fast. What happened afterwards? Massive push to the upside. Very sharp drop. 50% retracement. Yeah, look at it. Put a fib on it. Yeah, 50% of the move was undone. This is a profit take. This is everybody piling in short. This is everybody getting out of their short. This is everybody piling in short. This is people getting out. This is everybody piling in short. This is people getting out. And then the buyers taking control and the buyers getting out. Then the sellers taking control and the sellers getting out. Then the sellers taking control again and getting out. And it's just the same thing, isn't it? It's people selling and then people exiting their positions. Let's say people, institutions. You get squeezes. Squeezes happen. And if a squeeze is long enough, you might get to a point where you have to start closing out your positions. And you're not going to know that until you get to a point where you are going, oh, I've had enough of this. I'm going to shut some. And you'll take some loss. And you'll close this. Yeah. If this gets to 6, 7%, 8% for me, and I'm thinking it doesn't look like it's going to stop, I will start closing out. I'll close out 20% of that, 20% of that, 20% of that, 50% of that, and I'll take a negative 2.5% day. I'll still be in this trade, and I'll still be in it with 5% of drawdown, and I'll have a 2% loss on my P&L. But this is why I'm banking profit every day, because this is going to be needed to use. I'm going to need to use it sometimes to get myself out of this position. But the times you'll get into these, compared to the times you'll just get in and get out and just bank on a daily basis, are a lot fewer and far between. So you just have to give yourself confidence and look at the size of the squeeze that I'm in at the minute. This is a drop of 612 pips on a 771 ADR pair. Yeah, this has moved nearly 9 ADR in one go with one profit take in the middle. Go back and find an instance where it moved 9 ADR in one go. What's this? 529. Nowhere near. What's this? 470. This is 600. Yeah. So this is the biggest down move we've seen in this pair 528. Probably that is probably the closest I can come to it. Look what happened after, yeah? These guys that have made this happen, yeah, are all sitting there with $1 million positions in profit. They have to get out and put that in their bank, in their P&L, so they get paid their bonuses. They're going to do it, yeah? At some point, they're going to do it in exactly the same way as they did when they squeezed everybody long up there and went down, yeah? They're going to do it at some point. You just have to go back in time and look at what happened in the past and give yourself the confidence that it's going to happen. That's nice. So that's the only advice really I can give you. Your first one is always the worst. I remember my first squeeze. I remember my first 10% squeeze. It was US dollar Swiss. I still remember it now because I remember thinking, this is lunacy. I know I know exactly why everybody says you should always use a stop. Now, I'm never doing this again, never doing it again. Closed the position out and it went absolutely skyward, went through the moon. I could have doubled my account off the position. Literally, if I'd have held it. If I'd have gone on holiday for a week and come back, I'd have doubled my account because I had that much position size on and it moved that far in my direction. It was just amazing. But I didn't do it, and neither will you. But you've got to, you've just got to draw the line somewhere. That's the only advice I can really give you. And what I tend to do is I open up my my trade list basically, and I look at everything that I've got. So I've got a $20 profit there. That's the only one I've got a position on this, in profit on this at the moment. I look at this and I go, right, I've made 6% so far this month, right? So this position here is a 0.1 and it's 180. So if you take that 180 or 181, whatever it is, and divide it by 10, yeah, every single 0.01 position is worth $18. So what I can do is I can slow down the speed of drawdown that I've got by reducing that position down and take a 0.2 off of that one. That one there, I can take a 0.2 off of that one. That one there, I can take a 0.2 off of that one. That one there, I could maybe take a 0.3 or a 0.4 off of that one. I could take a 0.2 off of that one. So I can reduce all of these down by around about 0.1, 0.12 from a position size perspective. Take a small loss on it, and that will have the advantage, obviously, this is drawdown control, of, yes, I'm going to take a loss there. I'm going to reduce that, which is going to make me feel better. I'm going to reduce that, which is going to slow the rate of drawdown for me. And I'm going to bring my average closer. So by closing out some of your positions, what you're doing is you're pleasing the part of your brain that's panicking. Yes, you're taking a loss, but you feel good because you're like, oh, weight off my shoulders. I've actually got out of some of this position. I've reduced my lot size, I've reduced my drawdown, and I've brought my average closer. So it's easier for me to get out of the position. And if it does go against me, it's going to go against me slower than it did before. They're all positives. That's the only negative. But is it a negative, taking 2% loss or 2.5% loss? No. Still made 4.5% or 4% this month. How many other traders out there can you say are sitting there after a week with 4% profit on their balance? 2-3% of retail traders? Not many, because they're all using stop losses and they're all losing 5%. If you were trying to long, and this is something that I've done many, many times in the past over the years, you get stuck in a mean reversion trading is brilliant. It's very, very difficult mentally on you when you get it wrong, because you're always thinking, that one didn't work. I got stopped out. Well, that one was really, really extended. It must go this time. So you get in again, and then you go, I must go this time, and you must go this time. Before you know it, 6% of your account has disappeared. So you're now left with 94% of your original starting balance, and somehow you've got to make up 6% on one trade just to get back to where you were. Psychologically, that is much harder than sitting in 5%, knowing there's every chance that this could pop up there. How many times have you seen an ADR move in the last week? We've had a few, haven't we? If we get an ADR move on this today, 125 ADR, for example, up to there, I'm sitting there going, oh, I've hardly got any drawdown on this. It's only sitting in 2%, probably 1.8 maybe 2%, 2.2 maybe. I don't know what it would be. But when I get up to there, all of a sudden, I'm completely alleviated. I've been in the live room in the mornings, haven't I? And anybody that's been in it for a while can attest to this. Sitting in 9% of drawdown, yeah. The next morning I come on and I go, hey, I made 4.5% yesterday and I'm sitting in 1.2. Yeah, because all we're doing is we're waiting. The whole point of drawdown, the whole point of your balance is to be used to trade, used to put on risk. This is just putting on risk. You need to adjust your mindset to say, this is just risk. I am risking 2% on the DAX at the minute. I'm risking 5% on this. Yeah, I'm risking 1.2% on this at the moment. And it's going to go up and down, up and down, up and down, as you've seen in here. I mean, I've been going up and down like a lunatic on this for the last week. I've been watching this thing jumping from 6% to 3.7% to 6% to whatever. Doesn't matter. I'm just waiting. I'm waiting for the guys that sold, yeah, to exit their positions. And it looks like they're starting to do that. But I don't know if they're going to or not. But if it goes down there, I'll deal with it. I'll do something with it. I'll shut some out. I'll take a loss. I have to. But the amount of times you get in a squeeze like this, oil was a prime example, wasn't it? That oil move. Where did I get out of oil, everybody? I took, what did I take loss? I can't remember what it was. 5% or something. I don't know. I was scaling into oil long and I went, right, I've had it. I can't handle it anymore. This got to a point I was just, I can't handle this anymore. I closed the lot out and I was like, I've made a 15% month with all this loss. I'm happy as Larry and I'm flat and the world has lifted off my shoulders. What did oil do as soon as I exited? If I get out of Aussie New Zealand today, this thing will go through the roof. It will, because everybody's short here that hasn't exited yet, and everybody that added their short is going to get out of this position. That's why the market moves up and down. This is why this happens. Yeah. You've got to think like a bank. Banks are not in this today and getting out tomorrow. Banks are looking at month and 3-month moves. They are thinking, we're going to go long on this and we're going to exit on this in the next 6 weeks. You have got to wait for them to get to a point where they're happy. And that's the timing thing. We've no idea when they're going to get out. They are. But if you're in one, you just got to wait. And that's the thing. We are used to, as a stop loss trader, taking a long here, having a stop there, and having a TP there. Yeah. What will happen in the next 24 hours is either I will get stopped out or it will go towards my TP. I'll move to break even. I'll move my, it will come back down. It will stop me out of break even. Then it will hit my target. That's a typical trade with a stop loss. Yeah. You either get stopped out or you get stopped out of break even. Occasionally you might get one that wins. That's what 99% of people experience when stop loss trading. I have. Everybody has. You've all been there. Yeah. The difference between that is we get our result within 24 hours. Position trading, your result comes when your result comes. You don't know when that's going to be. So that is the problem. And that is the mindset shift that you're going to struggle with, Mohammed. And you are struggling with, and it's totally normal. But so the best advice I can give, and you look at other stuff, look at other pairs. Yeah. If you'd have got in long there, you'd have taken a bit of drawdown and got out. If you'd have got in long there and you didn't get out there, you'd have scaled into this thing and you'd have been sitting there for probably 2 weeks and then you'd have got that. Yeah. Sellers entering the market, sellers taking profit. That's a news event. Sellers entering the market, some sellers taking profit, sellers entering the market again, sellers taking profit. Yeah. That was a squeeze. You couldn't get out. You're still squeezed down there. You would have needed to done aggressive drawdown control to be out of this position. But then again, why on earth are you longing Aussie US? It's massively against trend, isn't it? If you're staying with the trend, you should be okay. Occasionally, though, like me, yeah, I was with the trend when I got into that position. The trend's changed. That's when you get squeezed. And this is why we try and stay in line with the trend as much as we possibly can. So hopefully that helps and that answers your question. I don't know which position you're in. You know, if you want to send me your trade, I'll have a look at it. But this is why we're getting small. This is why we're getting with tiny position sizing, so that we don't get squeezed too fast. And that's the biggest, and you know, Diamond will attest to this because he's been here for a while and a few other people will. The times it goes wrong are the times you get in with too much position, or you're getting too close together. If you're getting too close together with too much size, that is when this gets big fast. And there's a fine line between managing that distancing when you see a decent price action move or a reversal that looks good, and sizing it correctly. And this is where the EA is brilliant, because the EA has no brain. It's not you. The EA will just basically do what it's told. Yeah. Where am I? Here. You know, so you tell this, you tell the market reverse alerts EA to do something. That's literally all it will do. So you tell it to get in half an ADR apart. Yeah. And you tell it to increase the lot size by 1.3 every time you get in. And if you tell it to use a stop loss of this to gauge your position size to keep it small, that's exactly what it will do. So if you're having trouble, and I do a lot of manual, I know I do way more manual than I should do, but I'm aggressive. But if you're finding yourself getting in too fast and too hard, let the EA do it and don't touch it. Just don't touch it. So hopefully that helps. If you've got any other questions on it, though, let me know. It's all covered in the bootcamp anyway. Just go and watch the bootcamp again on drawdown control and how to handle squeezes. It's all in there, but it's until you get in one, you don't necessarily know you need to watch it again, do you? So, when do you say the bias has changed? And am I wrong? And I am wrong. And I am wrong. When do you say the bias has changed? Well, it depends what you use. I mean, you can answer that question yourself. What are you using for bias? That's when it's changed, isn't it? So for me, when this turns red, the bias has changed. Yeah, when this is green, I'm long. When this is red, I'm short. At the moment. I mean, with the moving average shadow, it's as simple as that. You know, you buy when it's green, you sell when it's red. However, you're going to get points like Euro US dollar. You're going to get points where this thing turns green, but your brain is like, still, that is the bias on this. Yeah, it's a really bad arrow, isn't it? US dollar long, euro short. So even though this is green, this is like think of this like a whale. This is the surface of the ocean, right? Every now and again, whale pops itself up to breathe, and then it pops back under. Yeah, that's what the 72 is. In a trend, the 72 is your breathing hole. 2472 is the zone where we know we're pulling back in a trend. So when it's gone wrong is when it does that. Yeah. So when the 72 or the 24 become support and we get a new leg up, that is when you know you're wrong and the structure's changed. If you're using the 2472 moving average, that's, I mean, you know, that's what I say. When you're, the time to start enacting drawdown control is when you're uncomfortable. Yeah, I can sit in 15% drawdown, not be comfortable, but not be uncomfortable, because I've sat in 15% of drawdown so many times and seen it unravel. I have the advantage of having done this a lot longer, so I'm not uncomfortable with 15%. But when you get uncomfortable, that's when you start shutting positions out. Don't be afraid to shut positions out and take losses. Yeah, if you have a scratch month, right, where you just get into stuff and everything you get into just seems to go wrong. You get a little bit of luck, you get a little bit of profit, and then it all gets wiped away because you've got stuff you need to get out of, and you end up with scratch month. You end up with a break-even month. That's a massive achievement. That's more than 95% of traders will achieve break-even. Getting to break-even is like, I've cracked it, because you didn't lose money in the markets. That's the first step. So if I shut all this out now and taken -3%, right, I've got 3 weeks 3 weeks left to try and get that back, that 3%. How easy is that? It's very hard not to bank 0.5% a day. I could close out 0.5% now, look. Close that out, that out, that out, that out, that out, and bank another probably 1%. If I wanted to. It's not hard. Because we let our trades work, don't we? We give, there's no stop loss, there's room. This can do what it likes for 3 days if it wants. Next time it goes down there, I'm out. I don't know when it's going to do it. I don't care. It's going to do it at some point. That's the beauty of trading like the banks. Yeah, they don't sit there and just take millions of losses because they've got a line in the sand where they go, oh, if it hits that, we're dead. Of course they don't. They use proper risk management, tiny sizing compared to the portfolio they're trading, and they let their trades work. No one can time this. There's 10 guys, 10 banks making this thing move up and down. They control 90% of this movement. The other 9 are against, you know, when you're one bank, the other 9 are against you. Yeah, the banks don't know when this is going to move because they don't know what the other 9 are doing. Yeah, but they do know what they do. Therefore, they know what the others are doing. So when they see this do this, they know that that's coming because that's what they would do because they all make money in exactly the same way. We just don't know when they're going to do it. So we just have to sit here, unfortunately, and wait. Look at that. I mean, if you're long on this, right, and you haven't got out yet, think about it from the other perspective. This is a really good way to look at it. Think of it from the other perspective. When you're in a squeeze like this, you're thinking, oh my God, I've got to get out. Oh my God, I've got to get out. Oh my God, I've got to get out. If you were in the opposite position and this was a plus 5%, what would you be thinking every time, let's say you went long here, every time you saw this thing do that, what would you be thinking? Oh my God, I've got to get out. Oh my God, I've got to get out. Because I've got 5% in profit. How many times have you seen 5% turn back to break even? You make nothing. You go, that makes you crosser than anything, doesn't it? When you've made 5% profit and it's turned into a break even because you didn't take the profit. What do you think the banks are doing? They're sitting there at the moment on the opposite side to us going, wow, we've got loads of profit here. We better start taking some. And as soon as they start taking some, the other banks that are in profit will see that move and they'll go, profit taking started. We need to start taking profit. What they do is they then add sell orders by taking profit. Then it moves down again. And people that want to go short move starting, will go short. And it comes a self-fulfilling prophecy. Up, down, up, down. That's all it does. It goes up, it goes down, and it moves through time. You can't time the up or the down, so don't try. You can't. No one can. We know it will happen, though, because it's what it's been doing for the last 100 years. There's no reason why it won't. As long as banks need to make money, they will enter positions which drive the market one direction, and then they will move the market back in the other direction to extract the money from those positions. As long as they do that, we can't lose. You can get it wrong to a certain extent where you become uncomfortable and have to take some losses. But if you held that position, let's say I hadn't taken any of this, and I held that position, and I just stayed in that position, I would get out of it. Yes, I might take 50% drawdown on my account, but I will get out of it. But you don't want to take 50%, do you? Drawdown on your account. Because you're a human being. And EA will do that. Market Reversal Alerts EA has been running for over a year now. It's fully automated on the H1M5 strategy, and it's taken 50% of drawdown. But it has also doubled the account. Because it hasn't got a brain that goes, oh my God, I've got to get out, like we have. And that's what aggressive drawdown control is for. That's for you to help yourself get out faster because we're impatient creatures. Anyway, hopefully that helps. I didn't have anything else I wanted to cover today on FX pairs, so I'm glad you asked that question, Mohammed. Thanks for that. If you've got any other questions like that, obviously feel free to ask because we do need to fill the time when the market is flat as a pancake, as it is this morning. Amit, China opening sometime will play to Aussie dollar strength. Yeah, Asian. The trouble with the Aussie New Zealand, and it's this is why this is such a lovely little trender a lot of the time, and it's the same as the euro pound, is because these two are both in the Asian session. You get tighter movement. It's a bit like the S&P. When you get one that goes out of whack, which we've had recently, we've had just nothing but good news coming out of New Zealand, nothing but good news coming out of New Zealand, and nothing but stupid, not going to put our rates up news and stuff like that coming out of Aussie. You're going to get that. But grand scheme of things, it's like saying, is the US dollar going to be stronger than the New Zealand dollar? Of course it is. The economy is a million times bigger. The country's a million times bigger. Yes. It takes a lot for the US dollar to be weaker than most things. So in the grand scheme of things, we're in a fundamental shift at the moment on the New Zealand dollar, but that will change. And it looks like it's starting to think about that now. And look at it. When you look at this position, and this is another good example, look at how close my moving average is at my break even is. My break even is at 200 ADR, right? I normally like to keep it within 1 ADR so I can get out fast, because I want to put the money in the, I need, on a daily basis, I need to be putting the money in here. This is my bank. I need to put it in here. So I need to be in and out fast, which is why I say to try and keep your average within an ADR, keep it down here somewhere. But on the grand scheme of things, it's not actually very far away for a break even, is it? Look at that move, and look at that. Look at that move, and look at that. Yeah, that last time would have been my exit. What happens if that happens? Yeah, that's what I mean. If the next move on this could be that. Am I going to go up there? No, I'm going to get out somewhere around there and go, thank God, I'm out. I'm keeping that, and I haven't got to use any of it to do that. So if I get that to break even and take absolutely no profit whatsoever on that position, all that's happens is I've been squeezed for 5% and lost nothing. So what? Bank 6. Anyway, I can labour that point all day. Right. I've been in 4 Swiss pairs since the rate announcement drop and currently in drawdown between 5 to 13%, but have been taking hedge trades netting plus 10% each month until I decide to get out. Yeah, that's another thing you can do. Hedging. I've never had any success with it personally, but I know people that have, that position trade. So yeah, I mean, it's difficult hedging. It's not something that I teach or do, but there is another option there. So you could always hedge your position, which basically puts the brakes on. So, worst case scenario, right here, if this thing starts to drop and I get to 6% in drawdown, what I can do is enter a 1.23 lot short, and it will not move. It will be locked there forever. I will have 2.46 on, and I will not go into any more drawdown whatsoever. I can't get out of the position, but it buys me time. You can stop this happening. You can stop that right now at 4.99%. If I go 1.23 short now, I will be at 4.99% forever. No matter what this thing does, I will be in the same drawdown because I'm hedged. And then you start removing your hedge. There's all sorts of ways of doing it. If you want to go and Google hedging, there's lots of things you can find out about it if you want to look into it. But in my experience, it ties you up in a knot. I just get into a mess, but that's just me. Other people do it fine. Mayo, morning. What is the advantage of the 24.72 moving average compared to the usual 21.50-200? Nothing. They're just moving averages, really. The reason I use these specifically, and on the daily chart, this is the 24 and the 72 on the daily. Yeah. So on lower time frames, I don't use moving averages at all. This 24 and 72 are the equivalent of the monthly and the quarterly moving average. Yeah, so this is trading days in a month, trading days in a quarter, including Sunday, which is a trading day, as far as the banks are concerned. So when I say looking again back to the COT report, the Commitment to Traders report, banks and institutions tend to move in cycles of 6 to 12 weeks with their moves. Yeah, so this is equivalent to their trend moving averages. So this is the bank's cycles moving average, if you like. So the 72, yeah, which is why the 72 is so nicely respected if you look at a lot of instruments. But, you know, you can say this about any moving average. You could put any moving average on here and you could tweak this. So if you change this from the 72 to the 75, that would be a perfect hit maybe. And everyone will go, oh, 75 is brilliant. Look at the 75 hit there. But it missed all those. There's no moving average that works across all instruments 100%. It just doesn't exist, does it? But it's an idea. It gives you an idea. So what this is saying is, at the moment, the banks for the last month are pushing. They've been pushing for the last quarter as well. That's all it's doing. So all we're doing is we're staying in line with and this is why I call them the institutional moving averages. You're staying in line with the institutions. Institutions are long. You could stick a 50 on here. You know, if I change this 200 to 50, yeah, jumps in the middle there, and you could say, you know, respected it there. Could say it respected it there a bit. Pulled back into it there. Didn't touch it there. Didn't touch it there. You know, I don't know. Doesn't really matter, does it? Look at that. Oh, look at that perfect 50 band. This is the thing I hate about moving averages. You know, people go, oh, it's going to pull back to the 50. No, it's not. It's just going to pull back. Where it stops has got nothing to do with a dotted line on a chart. The institutions never look at, they don't even know what a moving average is. They don't use them. They don't use anything. Institutions use line charts. Yeah, they don't have candlesticks. Yeah, they don't care. They have nothing to do with any moving average whatsoever. They pay no attention to any of it. It's all retail. I'm not going to be able to grab that. We'll change it. Okay. So yeah, it doesn't matter which you use. It's just something that shows you what rough direction you should be going in, because the banks are moving it that way, and it's like an unstoppable force, isn't it? Yeah. When you look at price action in any shape or form, when it starts moving in one direction, it's got about an 80% chance of continuing in that direction and a 20% chance of reversing. It's the 80-20 rule that we use throughout everything in life. It works the same in trading, the 80-20 rule. When it starts trending 80%, it will keep trending 80% of the time, and then you'll get to a point where it will suddenly change direction. Yeah, if you measure the amount of time it spends in a trend as opposed to in a reversal situation and forming a new trend, you'll find there's about an 80-20. All this is doing is just measuring that for you and saying, all right, I should be long. All this time, from here until there, I was saying I should be long. And even here, I was saying I should be long. Yeah, until this proves me otherwise, and this is what one of my mentors said to me. When this is green, you go long. When it's red, you go short. When it's green, you go long. If it switches red when you're long, you close your position and you switch short. You flip. So if you wanted to use an always in type strategy, you would go long there. You would get out your long there with a profit, and you would take a short. You would maybe get out there and go long. You probably wouldn't. So you'd be short, and then you'd get out your short and you'd go long there. You'd been stopped out there. You'd go the other way. You'd go long there, and you'd stay long. You'd get out of your long there. You'd flip short. You'd take a little loss. You'd flip long again. And you got out there. Nice profit. This is what the institutions are doing. And this is what they do with the S&P, and they always have. Yeah. You buy the S&P. You never sell the S&P. You buy it. Institutions run what's called a long only system on a lot of stuff, which is something the same as the S&P. Yeah. They buy here. That's all they ever do. They buy here. They never sell it. They buy every dip. And they keep doing it until it breaks down and they can't get a buy on. That's when we know we're entering a bear market. But that's why I use them, because they are representative of a 3-month and a 1-month move. They're telling you what the institutions are doing. And if you want to stay in line with the trend, the proper trend, the long-term trend, but you could use them. Switch if you want to use them on a lower time frame chart. Go and have a look. But lower time frame, you're probably better off using the 50 and the 100, because that's what everybody else is using. But I don't know. It doesn't matter what you use. The fact of the matter is, if you're going to use a stop loss with anything, it's going to stop you out. If you want to use moving averages on lower time frames, you just have to go and test some out. But it depends if you're a trends trader or a mean reversion trader. I'm a mean reversion trader in line with trend, so I use both. It's just there's no right or wrong. Use what works. I wait until the extremes, then release one side of the hedge and bank it and wait for the pullback. Yeah, exactly. So we're talking about hedging. And that's what you do with hedges, and that's what I mean with my Aussie New Zealand. The trouble I found with it, and this is why I couldn't make it work, was if I hedge now and it pushes down, we're already at an extreme. That's why I'm long. When do I let go of the hedge? Yes, I'll bank some money, but then my DD screams up to like 12.5%. And it makes me want to head into a long position. And then if that pushes down again, I should put my hedge back on. And I just found I got myself into a right old mess with it, hedging. I tried it and I just couldn't do it. Maybe I'm executing hedges at the wrong time, too late, probably. But yeah, Euro US dollar, look. I've been in that for a few days now. When did I get into Euro US dollar? There. Got into Euro US dollar there. Been in it for a day, sitting in drawdown. Got in another one. Went more into drawdown. Today, I'm in profit. So, if I'd have got into this position with a stop, I stopped out. Pushed up, pulled back down. If I'd have got into a position there with a stop, stopped out. I've taken 2% loss, or let's say 1% loss if you're a 0.5% trader risk. Yeah. As a position trader, all I've done is put 2 positions on and I'm in profit. Yeah, but I'm not making a fortune. I don't need to. All I need to do is do this lots of times and make that bigger. No, that's the whole point. Pound, I think they will increase the tax, and this will add to GBP weakening. They will definitely not print more money. Yeah, I don't know. Pound, we got to wait until the 17th of November, and we will find out. But yeah, pound, as I said yesterday, range bound at the moment on the pound until pound odds not, is it, at the minute? But we're not going anywhere on the pound, which is why I was quite surprised we had an ADR hit on that yesterday. It's just manipulation. Obviously, they're undoing it today. It's the same thing. So the bank's moving money, moving, and then they take profit. That's what they do. They have to do it. It's the whole point of the bank is to make money. So in order to make money, they need something that moves. And if something isn't moving, they move it. What? It's just the way it works. It will do unless they come up with some other system and way of making money that doesn't involve manipulating the market and moving it up and down. But I can't figure out what it is, because we've had markets since the dark ages. We started selling fruit on street corners and stuff, and we will continue to do that. As long as somebody wants to sell something and somebody wants to buy something, we'll have a market. The Fed should come out with a 0.5 basis point increase. Yeah, maybe. I mean, it's no point in trying to guess what's going to happen. It'll happen. What will happen will happen. You'll either be on the right side of it or the wrong side of it, and you'll deal with it accordingly. We don't know what's going to happen. We know that the taxes are going to be put up. We know that for a fact. Whether that's going to have a positive or a negative impact on the pound short term, don't know. Could go up, could go down. Who knows? Afternoon Profster, morning Profster even. Haha, 1 year strategy. Yeah. Yeah, I mean, but you know, and this is the investment banks. This is what they're doing. Yeah, they're not looking to get in and get out. Oops. Fast. You know, it is, and this is why people like Warren Buffett make 10% to 12% return a year, because they just literally buy up the S&P as it's going up. If you've got $20 billion, making 10% a year is a lot of money. For you and me, it's probably better than our pension fund would achieve. And that's why I personally have my own fund that I trade the S&P with, because I can make more money than my pension fund. But I'm not going to make a fortune out of it. But that's why everybody's drawn to day trading, isn't it? Because they want to be in and out today with 5% profit a day, which is not very easy. I'm in short on GU at 114.748. Cool. So you're in profit. That's good. I'm not far off. But you know, this is a prime example of the, you know, keeping your average within an ADR. We had an ADR hit yesterday, didn't we? So if you were long pound yesterday and waiting for an ADR hit, you got it yesterday. I'm waiting for an ADR hit to the downside. Yeah. So as long as you're keeping your average as much as possible within that, all you're waiting for literally is one day. And again, another thing, Mohammed, if you're still watching or you're watching the replay, look at the daily chart. When you're scaling into something in the wrong direction, you're typically, let's say we're longing, you're just getting down days against you. You're literally waiting for one of those candles. Yeah, they always come along. You know, if you were scaling in long here, they always come along, these big up days. Yeah, we're always going to get them. You're just waiting for that. So all you're doing is you're sitting, and this is the problem with drawdown, you're sitting watching this thinking, oh my God, the world's collapsing. And then the whole lot, literally in one day, will be erased. That will disappear and it will turn into plus 2.5%. Because everything moves in the same way at the same sort of time. So when something screams to the upside on pound US dollar, for example, everything else US dollar will scream to the upside. And if you've got like triple exposure or double exposure on the US dollar, all of your US dollar positions on that one day are all going to go into profit. And this is all going to disappear. You're just waiting for the day, you know. And, you know, if we have a bearish, look what happens. If we get a bearish engulfing today, how many times do we get bearish engulfings? All the time. Happens all the time, doesn't it? Bearish engulfings, inside bars, big down candles. Just waiting for, you know, it doesn't even have to give me a bearish engulfing. It gives me 3/4 of a bearish engulfing. I'm out with a lovely profit. I'm just waiting. You know, just sitting in the market with risk on, waiting. That's your job. I have serious question. Oh my God. Do you think there is inside trading in Forex? For example, knowing someone in the Fed or the Bank of England, people behind the desks. I think it'd be very difficult for them not to be, wouldn't it? Someone somewhere knows what's happening with the budget on the 17th of November. And someone with a very keen brain will know what impact that's going to have on the pound. I don't. Someone does. So yeah, I mean, I'm sure there is insider trading. There's lots of instances where Citibank employees and lots of bank employees have been fined, you know, millions and millions and millions of pounds for manipulation in the markets. And there's little Telegram groups out there where they're all talking to each other. You know, if you're sitting on a bank, think about it. Like my mate Steve used to work on Barclays market maker desk, and he used to work on the hedge desk as well. He's worked on lots of sections of finance in Barclays trading, you know, and he's sitting there with an order for $2.5 million to hedge long against a Japanese export, right? So he's got to take a long US dollar yen position. He's got to execute that order. To execute that order, he needs somebody on the other side of this order to be selling $2.5 million worth of US dollar yen, right? So he knows for a fact when this order is executed, the US dollar yen is going to go up, right? So the person or the bank that has to take the other side of his trade is going to want something in return, yeah? Because when he sells $2.5 million worth of yen, he's immediately going to go into drawdown on that position, isn't he? So what he's going to want is this guy at some point in the future to unwind his position, and he's going to want to know when that unwinding is happening so that he can add to his short to escape it. A position trade, funnily enough. So yeah, there is insider trading, and they get caught all the time for doing it. But there is, if I want to go long with 1 million lots now, someone's got to be sitting on the other side with 1 million lots. And this is why we break orders down and you see large orders executed in the market. Yeah, this is why we watch the tape in futures. You see large block orders coming in, right? All of these orders here, I don't know what that is added up. 20, 30, 40, 50, 60, 70, 80, 90, 100, let's say 120 odd, right? That is 120 contract short. But did they execute 120 contracts short at the same time? No, they broke it down into 10s and 20s and 15s. Because there's not one person sitting there with 120 contract long in the market that they can do business with. So they have to break it down into small parts. To do that as a bank with a large hedge order, you need to find someone to take it. So either you break it down and hope it gets filled in multiple small parts, and that the other 9 banks that are trading against you don't screw you during the process, or you find someone to scratch your back and then you'll scratch theirs back again. This is why they get caught and this is why they get fined. Let's say you are working for HSBC and I'm working for Barclays and I've got that order to execute. If I pop onto Telegram and say, I'm about to execute 2.5 million short. If you want to make some money out of this, I'm going to be exiting the position on Friday. Yeah, say that in Telegram. You agree. You know about it. I place some orders in. You start filling them. We delete that Telegram chat. Never happened. We just both made a new Ferrari. Of course it happens. Has to. It's just the way of the market. But it's whether you get caught or not, isn't it? Mayo, in relation to the COT report, I understand the background makes sense. Yeah. Yeah, COT's, I'm finding COT less useful. I'm not using it at the moment. This market is not driven by anywhere near as much sentimental trading as usual. It's driven by fundamentals at the moment, and you don't need the COT report to tell you what to do. You can see what needs to happen. We're in a bear market. You can see what's going on. The COT report isn't going to tell you much more, I don't think, at the moment than you can see on the screen. Looking for the gap as TP on the pound US. Yeah. That's my TP in there. Some of my TPs, but I'm not going to hold it down to that. That will not get honoured. It's down there in case we get some. Let's say Richie Sunak falls over and Liz Truss has to take control. What do you think is going to happen to the market? I'll take that. If something nuts happens and I'm off making a coffee, I'll take it. But I'm not going to hold it down to there. I'll be out here. I'll be out before ADR today, above that high, in that gap, in that propulsion move. Probably the same as you. That's cheating, yeah. Why do you think bankers have got so many Ferraris? Yeah, they're not stupid. But it's this is what I was saying. Futures, the futures market and the Forex market are very different beasts. Futures is all a centralized exchange. Everybody can see everybody's orders being executed, whether there's iceberg orders in there or whether people are spoofing or what's happening. You can see every single execution of every single order happening in the futures market. Yeah, every single transaction taking place. You can see every lot, every contract being done. In FX, most of the foreign exchange transactions are what we call OTC, which are over-the-counter transactions done interbank. So you don't see it, which is why volume is utterly useless. Yeah, this volume, no use whatsoever. All this is your broker. This is the volume going through your broker. You can't see what the banks are doing. No use whatsoever volume in FX because it's not a centralized exchange. It's all done OTC, over the counter. And the thing with that is, obviously, an over the counter, you scratch my back, I'll scratch yours. You've got no idea which way this thing's ever going to go, have you? You've got no idea when they're going to execute it. Is Barclays sitting there right now with $2.5 million hedge on the pound? I don't know. I'll find out when it does that. What was this? Well, we know what it was, but you know, it's order execution and manipulation because they need to do it. And this is why I say you can't time this. But what we do know is when his back's been scratched, he's going to scratch the other guys because he's got to get out of that position, hasn't he? That's why we trade the way we trade, because we know what the banks have got to do to make a profit. Every buyer has to become a seller. Every seller has to become a buyer. Otherwise, no one can make money. Does looking at the future data on the exchange help in trading Forex? No. No, not really. Futures is instant. You know, futures you're in and out. If I'm going, I'm just going to move this down to 1 micro. If I'm going short now in futures, right, I'm getting out down here. Yeah, all of this stuff. And if you had a heat map showing now, you're not going to, there's nothing, no information here really that will help you with anything in foreign exchange. This is the ES, the S&P 500. If you can look at individual Forex currencies on the futures market, but this is showing you what is happening. This is showing you transactions happening right now in the futures market. It doesn't help you with forecasting what's going to happen. This thing's going to go up and down. Whether it goes up or down now isn't going to help me make a decision on whether I should be long or short something for X number of days or weeks or months or minutes. You know, if this thing flies down here, this is the low of the day down here. Yeah, see there's no orders been executed below this level. That's the low of the day on the S&P. You know, if it goes down there, 90% sure it'll come back up there. But it doesn't help me with any decision on anything else. You're trading inside candlesticks. So it's more micro, more granular than a candlestick. This is not even time-based. This is second by second, contract by contract. The most micro level you can possibly get in trading. Just going to get out of that. So yeah, it doesn't help. Profiter, you found out after that. Yeah, volume helps. Volume helps a lot. So this is a volume profile. So this is how much volume has been contracted at every single price. Yeah. So I can tell you that here there was a lot of volume conducted. Here there was a lot of volume conducted. So I use that to my advantage when we trade back up into this area, as we have pushed down so far. I know that there was a lot of volume contracted there, and after that volume business was done, the market moved down. So we're in price discovery short. If we come back up into here, it's likely that the people that executed transactions there to drive the market south will defend that and drive it south again. Yeah, so volume profile is absolutely key. You know, and like this, the green down here and the purple, this is where the vast majority of the transactions have happened today in the purple area. When we get down to the green, this is light volume. And we should be trading back out of light volume. Think of it like a wick. There's your candle. Yeah, there's your wick. Yeah, futures is just different. It's just a totally different thing. It's just a scalping mechanism for making money quickly out the markets. Do you think there will be new software for trading rather than MT4 or MT5? There's loads of it. There's tons of software out there. Yeah, I mean, Jigsaw, what I was just showing you. Jigsaw's a charting platform as well. Yeah, so Jigsaw does charts as well. There's all sorts of stuff you can put on your charts in Jigsaw, like cumulative delta, swings, shows you the volume. 24,000 contracts short, 4,000 contracts long, 13 short, 9 long. What do you need to be doing? If there's 24,000 contracts going short and only 4 going long, 13,000 contracts short and only 6 going long, what do you need to do? Sell. Because there's way more contracts selling than there is buying. There's all sorts of tools you can use and software you can use. You use NinjaTrader, multi-charts, Thinkorswim. There's tons of it. MT4 and MT5 are just the easiest, I think, to get started with. This is hard work from a trader's perspective to get it up and running. So DAX has just pulled up basically and gone nowhere so far today. So we did get the opening range high breakout. And since then, we're just sitting in accumulation at the minute. So we didn't get the short move yet. We're literally just Christmas treeing at the minute. Red, green, red, green, red, green. Dull as dishwater. No news. This is trouble. No news. There's nothing to move the market at the minute. So yeah, MT4 is definitely easier than NinjaTrader, as Chris just said. And obviously TradingView, a lot of people switched over to TradingView, which is, you know, an online version. It's what you like. I personally just like MT4 and I like MT4. I don't like MT5. Yeah, Ninja's just different. It's just different. The thing with futures trading is in futures trading, you literally use price action and volume profile or candles or footprint charts, or, you know, so the charts that you use, a lot of people use footprint. So a lot of people use a footprint chart. A lot of people use volume profile. Market profile. What do you mean you're unable to load MES? Okay. Something wrong with this ticker at the minute. I don't know what is wrong with this ticker at the minute. It's not working properly. There we go. I did start to load. I keep getting this message coming up about MES, and it's not able to do anything with it. I'm able to trade it and everything fine, but for some reason it's just not working on the charting. But anyway. All sorts of stuff you can use to trade futures, but futures is all about order flow and price action. Indicators, I mean, people do trade with indicators in futures, but it's about the here and now. You're moving now, short now. In fact, I'm going to take another quick position short on my NASDAQ. Should we be cautious with the election results today? I don't know. I honestly don't know about the US midterms and what impact they're going to have on that. Because people go to the polls today. Do we actually find out? The outcome will likely be projected before the official vote count is completed. based on early vote counts and exit polling. Right, yeah. So we will find out today. I really don't know what impact that's going to have on the US dollar. No idea. Could do anything, couldn't it? But I'm not sure. Keep your eyes peeled on here, I would. Right, okay, so there's another positive yen there. Another stimulus package, which might well boost to the yen. What do we need to raid rates? More to tighten away. We all know that. We all do. Yes, that's just coming down again. So again, look at market structure on this. Should be going for new lower lows. I think we're going to come down and test the lows today at some point. Historically, after the midterms, had quite strong days after the election was done, even stronger when there was one party that won the House. Yeah. I think, I'm bullish US dollar anyway. So I've just got another sell stop on here, by the way, as you can see. So this low here, I put this one on yesterday. I'm adding to the position. So yesterday in London, we did this lovely little accumulation and drop and then pulled back and retested those highs. So I put another pending order in there yesterday, expecting New York to continue that move down, but it didn't. So I've still got that order on. This is going to act as either a support today, and we're going to have a little bit of a bounce off of it, or we're just going to flush straight through it. And then from there to there, there's nothing to stop price. So we could easily get an ADR hit today if that level breaks. And I'm adding, which again brings my average up a little bit more, puts me easier within reach of getting out. And obviously I make more money on the way down. Yeah, so I don't know what's going to happen today with the midterms. I've no idea. Could go mental. Hopefully, the US dollar just goes absolutely nuts and flies through the roof. That'd be perfect, because I'll get out of most of my stuff. I only use Ninja because I'm tied to Apex. Yeah, I've left Apex now, Chris, because I found better. Problem with Apex was payment. Getting paid takes so long to get paid. I can't wait 3 months to get my money. And I'll hold for 3 months. That's the problem with Apex. You've got to hold your account for 3 months, and that is not easy. If you want to trade every day, it's not easy. So I've switched over to someone else. Profstar, I'm going. Bye then. I hope the US dollar strength continues. Profit DAX dropping. Yep. I just want to say this your channel is a masterpiece. I'm to tell my son and grandsons about you. Well, back in the day, there was this bloke called the Market Structure Trader. Yes. That'd be nice. Go tell the world. I've still only got 30 odd people ever. There's only ever 30 to 40 ever in here. I'm quite happy with that. I don't want hundreds of people in. Some of these live streams you go and look at. You're not going, you're just editing your words. Okay. Yeah. You watch some of these live streams where you got like hundreds of people and thousands of people in there and get bombarded with people spamming all the time. It's just like really hope it doesn't get to that level, to be honest. Oh my god, the DAX is just not playing ball today. None of these indices are. Tough morning today. Ronnie, I'm 34 and really want an honest answer. Is it possible to make millions in trading? Or is it gambling? Yeah, you can make millions in trading, but you need a very, very big account to make millions. Basically, you can't make millions without over leveraging. Attempted to send data to the server 3 times with error. Will not send for 5 minutes. Oh, options manager. Yeah, no, you can't. It's gambling. If you realistically, there's 2 different ways of trading. Scalping, small time frames, where you are getting in really fast and hard with large risk, and you're trying to make 1 or 2% on a candle move or 2 candle moves. In theory, yeah, you could make 1 or 2% a day, but you won't be able to sustain that because you are trading pure chop in the market. So you've got to have an element of luck on your side, and there are people out there that can do it. There's traders out there that can do it, but they are very experienced, have been trading for decades, and they are super strong brained. Your brain has to be completely, I'm not interested if I lose 10% a day. Yeah, you're going to have 10% losing days. You're going to have massive losing days where you lose 150 points. You've got to be able to sustain that mentally. The vast majority of traders that personally I know that make profit make somewhere between 5 to 20% a month. I'm somewhere in the 5 to 15% a month personally. So do the maths. If you have a 100k trading account, yeah, you could make somewhere between 5 to 15k a month. If you haven't got 100,000 in personal money that you can put into trading, you're going to have to go and get some money from someone else, i.e. a prop firm. That prop firm will only allow you to draw down by around about 2.5% a day maximum, and 5% to 10% in total on your account. So either you're in a position like me where you've got enough money to trade personally and you can do that, or you go to a prop firm. A prop firm will force you down this route, scalping, or small intraday moves on hourly charts or below, really. So yeah, you can make good money, but you won't make a million, no. Not unless you've got a million. Money makes money. If you got a million, let's say you got a million and you're making 10% a month, what's that? Times 10%. That's 100 grand. Yeah, 100 grand a month. So if you had £1 million or $1 million personal fund, and you could consistently make 10% a month for 12 months, assuming you can do that, you make $1 million. You make 1.2 million. By the time you pay the tax on it, you're going to get what? 400, 500k of that? So really, if you want to make $1 million trading, you've got to have a minimum of 2 to 3 million personal funds to be able to do that. That's the real. That's real. That's real world. The guys that are on Facebook with their Lambos saying, "Don't ever pay for Forex signals again. Come and follow us." They're just confidence tricksters. They're all confidence tricksters, and they're all after your money. Somewhere along the line, they're going to ask you to give them some money for something. So yeah, real world, 10 to 15% maximum after you've actually become a consistently profitable trader, which is going to take you 3 to 5 years if you're lucky. Then yes, you can make some money. But I'd rather tell it like it is. That's my experience anyway, and that's the experience of everybody I know that makes money trading. And I have known people that have, had very good, consistent results, making 20, 30% a month. But they have blown, at some point, they have blown their accounts completely. There's people that have developed really good EAs that last a good year, but then they blow the account. So it's whether or not you can make enough money in that period before you blow the account to live on, before you've got to start again. Because it's gambling. If you're risking too much, you're gambling, basically. And gambling works. People do make money gambling. Professional poker players, There's skill involved in that, but there's a hell of a lot of luck. But all those professional poker players, they're not making $1 million. They're not winning the World Series of Poker. They've got a $50,000 bankroll to start with, and then they're lucky enough to double it up and win $250,000, which they then roll back into the next tournament. They're lucky enough to win 3 to 5 on the trot. Less than 1% of the whole planet is going to be able to do that, aren't they? So yes, you could make money that way. You're better off going into casino, to be honest. Profstat, remember when I told you I just graduated from high school and I just entered university finance degree? Maybe one day I will be in the Q8 investment authority. By the way, 4th biggest investment fund in the world. Yeah. If you want to make real money trading, and you're 34, aren't you? Yeah. You're probably too late. You might not be. I don't know. If you want to become really wealthy in trading, go and work for an investment bank. Go work on a prop desk in a bank. They will pay you peanuts, and they won't let you trade with anything more than 100K for probably 6 to 12 months. After they've made you sit here and watch this ladder going up and down for 6 to 8 weeks, and you're bored to death, you're about to kill yourself because you just had enough of watching this bloody thing going up and down, and you still can't figure it out. If by then you are still there, and they give you a 10K account, and you can make money out of it, and they put you up to a 100K account, 2 years later, if you're one of the 2% that makes it, then you might be able to make enough money to buy a Ferrari. It's a horrible industry. If I was going to recommend anybody do anything, it wouldn't be this. Honestly. I never went the banking route. But yeah, it's not for me, banking. But very hard work. So no, you can't make money like that. Or you cut your tax rate like Amazon. Yeah, you could cut your tax rate. Yeah, so if you're earning lots of money, you can find ways. There's ways and means around tax, but with trading, if it becomes your main source of income. I mean, this is the way in the UK. It's like gambling. If you are a professional, if you class yourself as a professional gambler, there's things like spread betting and things in the UK. If you earn more money from gambling than you do being paid in your salary, the government turns around and goes, well, actually, your main income is gambling. So they will tax the gambling income as well. You can't win. Death and taxes. It is true. They're the only two things in life you can rely on. So when you make money trading, you still have to pay a lot of it. You've got to give a lot of it back. And the more money you make, the more you have to give. And in the UK, as of the 17th of November, it's going to get even worse. You have to do the maths. When I got to a point where I was earning, I think it was 68K. When I got to that point, I did the maths. And with the tax laws in the UK, for me to actually make more money than that a year trading, I had to not double my trading profits, but it wasn't far off, because when everything above that level, I started getting I think it was 45% at the time when I was doing the calculations, 45% tax on. So if I made 100K more in profit a year, I would only get 55K of that. So you get up to this point in your earnings where all of a sudden you've got to make so much more money because of tax to actually warrant it. It was like, well, there's no point in pushing myself to make 20% a month. If I make 15% a month, it's more comfortable, or 10% a month. It's more comfortable than trying to make 20% a month, obviously. And if I make 20% a month, I'm actually not going to earn a huge amount more because I'm going to have to pay so much tax. There's no way around it. Just the way it works. But yeah, unfortunately, that's the way the world works, isn't it? We've got to pay for stuff, otherwise we'd have no police, no ambulance, nothing. Fire department. House is on fire. Have you paid your taxes? Nope. Sorry, can't help you. Profits are probably coming closer to top 2 in the coming years. I hope so, yeah. Morning cash flow. I've been at a prop firm and some are just as clueless as bedroom dwellers, sadly, yes. Yeah. The thing with all prop firms, even in real life prop firms in London, there's a couple of prop firms in London that advertise, you know, and they have prop desks, if you like. They teach people how to trade. You look at their actual accounts and what income they make out of training and income they make out of prop desk fees, what they charge their traders to sit at a desk with a terminal, with a Bloomberg terminal. They actually don't make as much money trading. Because it's why? Because it's hard work. It's easier, isn't it, to teach people how to do something than it is to do it yourself. You know, like they people that what's the saying? It's something along the lines of those that can't teach. So if you and we had this when I was in sales. I used to work in sales, and all the sales trainers that were training us were failed salespeople. They couldn't make it as salespeople, so they taught people how to sell. How crap is that? So most of the prop firms are prop firms because they can't trade the money, so they get other people in to make money out of them. Anyway, it's a funny old industry. We're just coming up to challenge the highs on the DAX. Not the highs, it's New York highs, and obviously we've got yesterday's high. So a big strong push on the indices at the moment, which isn't helping my P&L. Sell on the market structure indicator. Yeah, it won't help them. There is no tax for Forex traders in the UK. No, there is. Definitely is. You get taxed on your earnings. How you earn is entirely up to you. I'm self-employed. Lee, do you know what pivot points are? Yeah. And have you used them and know someone who uses them? I hear institutions make money out of them, apparently in some market turning points. Yeah, if you want to learn about pivot points, there's a thread on Forex Factory by David. This is going to test me. There you go. This one, it's just called Pivot Trading. It's 2,000 pages. Good luck. This guy, and again, I've followed David for quite a while. Let's see if he's still around. No. Oh yeah, no, he is. Yeah. Just dropped by to say hello. He's not active. Just a reminder, price action is not only about counter patterns, it's time for fundamentals. So this, if you want to learn about pivots, here. But pivots will give you nothing. Yeah, David's not active anymore. A lot of these threads are just not active anymore. It will give you nothing rocket science. So ADR, yeah. All a pivot is a measurement of where price is expected to potentially turn. Yeah. Sometimes it does, sometimes it doesn't. Yeah. Sometimes it pivots. I've probably got David's indicator in. I don't know. No, I probably haven't in this one. Actually, it's quite a new terminal. All they are is a level that something might happen at. The problem with pivots is you will take every one of them. If that one fails, you'll take the next one. then you'll take the next one. Remember that thing I said earlier about I've lost 1%, 2%, 3%, 4%. So I'm now 4% down on my account. Why? Because we had an ADR hit today and it blew through every pivot. So, yeah, they don't work. Well, they do work. They do work. Pivot prices do work. So. But go and have a look at David's thread if you want to learn pivots. There's an indicator in there that will do the pivots for you. Yeah. Oh my gosh, Greg Stuck and Oxter FX can be on your face. Those people. Yeah. Let's see if we can get a Greg. A Greg, shall we? Let's see if we can get a Greg. No, we didn't get him today. Master Naked Trading won today. We didn't get a Greg. He comes. It's really hard to time Greg. He's. I'm not going to get any more ads now, am I? No, I'm not going to get any more ads now. Well, if I scroll through, I might get some. No, unfortunately not. No. Poor old Greg. He does come around every now and again. Those who can do, those who can't teach. Yeah, that's it. That's the one I was looking for. Property is your main source of income. You have to pay tax, but a good accountant can help making less money. Yeah, I mean, the way to get around tax, really, not get around it, but make it more stomachable, if you like, is to turn yourself into a limited company and start writing off more things. So paying yourself a pension out of the limited company will help. But a good accountant will tell you how to manage your taxes. I've got a limited company. I'm self-employed and I have a limited company. So I spread my finances the best. He tells me what is the best way to get the best tax benefits. You can't stop paying tax, but there's ways you can structure yourself so that you pay less tax, or you can pay yourself more by, like I say, extracting a pension. You can draw 30k out of your limited company in pension every year. So, and that comes off of your corporation tax, and there's all sorts of things you can do. But first of all, try and get 3 months consistency, and you don't need to worry about all this stuff until you make money. So there are no taxes in Q8, but I think next year they will add VAT. How do they make money in Q8 then? They don't tax their population. Robbie, man, honestly, are you even a full-time trader? You seem super negative. I'm not super negative. You asked me if you could make millions trading. I answered you. Do you want me to lie? All right. Yes, you can. You go and buy my indicator. It's $49. I've got an indicator. It will change your life. You'll make millions out of it. Honestly, I make millions every day. It's brilliant. It's amazing. Or would you rather I lied to you like that, or would you rather I tell you like it is and save you a fortune and possibly your life savings? If this is your main source of income, why are you selling a course? I'm not. It's all free on YouTube. You obviously haven't. Hang on a minute. You're on YouTube. You obviously need to open your eyeballs a little bit wider. It's all on YouTube. It's all free. And apart from the indicators and EAs, nothing gets sold. Yeah, so I've created some indicators and EAs that I use, which are here, and that you can also use. Do the position trading bootcamp, and you'll see all the indicators that I use. The EA that I built to automate everything. I charge for those. Yeah. I don't make a living out of those. God, wouldn't be able to pay the mortgage. They're there because they take a lot of my time. I do all this for free, right? Because it keeps me in check personally as well. And I hope I can help people. I've been doing this for 14 years. I've had a lot of people along the way rip me off, take my money for courses that are absolute crap. I've had a lot of people along the way which have held my hand and become one-on-one mentors with me. And one of those mentors said to me, if you crack this, pass it on. And I'm cracking it and I'm passing it on. That's what I'm doing. That's why I'm here. The second reason I do it is because it keeps me in check. I stop making stupid trades when I'm accountable. Yeah, that's the other reason I do it. But yeah, I make money out of indicators. Yeah, but not a lot. I don't know what a lot is actually in indicator sales. There's some people that seem to sell thousands of them a month. They make a lot, but I bet they spend thousands a month on marketing. Profits, Robbie, profits, nor you share the way you profits, nor you share the way you trade. Say something, dude. I'm a tax lawyer, not here for taxation classes. What? Profits, nor you share the way you trade. I don't understand that line. Robbie, if either go and watch the boot camp or don't. I don't care, honestly. It's up to you what you do. Apart from the indicators, any good results with Renko bars? Yeah, Renko I liked. I like Renko, and I started using Renko in Ninja, but Renko, like anything else, Renko's really bad in MetaTrader. If you're going to use Renko, go and use Ninja or something else, or use. Got Renko now. Look. So Renko's great, but again, it's like any other strategy. All the advantage of Renko, that's way too big. Probably need one brick Renkos on this. Yeah, that's better. The problem with Renko is it's great from a risk-reward basis, but it just, I don't know, there's something about it. It just doesn't, it's just very, very hard to make money out of Renkos. I started using them and I thought I'd found a really, really easy way to trade with Renko, but I couldn't. And it's one of those things you just got to kind of try it and see with Renko. But it is good. But the trouble with it is there's so many settings, and every instrument needs a different setting. So what you're kind of doing with Renko when you set up a Renko chart is you're curve fitting Renko to the actual instrument. Yeah. So what like I'm doing here, the 4 was too slow. I changed it to a 1 that's too fast. I'm now changing it to a 2 if this bloody charting system will work. I don't know quite what's going on with this. It's MES. For some reason, there's a problem with MES at the minute. There we go. So you end up curve fitting it, and the way W pattern reversals, range breakouts, it's awesome for that sort of stuff. But it's not like it's like anything else. A range breakout is a range breakout. If you use Renko, you get in there, you've got a stop of 4 bricks, you have a TP of 6 bricks. It's all the same sort of stuff, really. So, but yeah, I mean, try them is all I can say. But you will end up curve fitting them. This is the thing. That looks really good, doesn't it? That's a 3 brick. But have I curve fitted it so that it looks nice now? Look at that. If you'd have taken along there with a 2 brick stop, you get out when it ticks down. You didn't get out of that thing. Awesome. But go and use it in real life. This doesn't happen. What ends up happening is you get chopped out and you're always behind the curve, because by the time this brick is closed, yeah, you've missed this move and you immediately get a reversal. So you get out with a loss on that one. It just didn't work. I just couldn't get it to work. I had lots of strategies that looked really good with Renko and they just didn't work. I tried really hard with Renko, but no, I couldn't make it work anyway. But go and play with them. They, like I say, in the bootcamp, try everything. You've got to try everything and take the bits that make sense to you. There's a lot of people that trade Renko. There's guys that sell systems and strategies. Again, there's guys that sell systems and strategies for Renko. Go and buy their systems and strategies. They don't trade live. They don't trade Renko. If they were, they wouldn't be selling a system or a strategy, would they? Wouldn't need to. But yeah, anyway. Oil, Mr. Oil. Any good results with scaling into winners? Yeah, I mean, you can scale in on every brick with Renko as well. It is good for that. Diamond, Robbie, I've been trading with Lee for about a year now. He's one of the few legit traders out there honest about trading. Thank you. 100% right about what it takes to make a living from trading. I've been trading over 10 years, but over the past year, I switched to FT thanks to Lee, full time. Cool. Morning, Steve. Then in 14 years, you must have done over 1 million now, I guess, as compounding. No, there's no compounding. Don't go compounding. Just suicide. Don't do it. Doesn't work. I've done over 1 million. No, God, no. I haven't been trading profitably for 14 years. No, you're misunderstanding. I haven't been profitable for, I've been trading for 14 years. I have blown, go and watch the Bootcamp, Robbie. It's all explained in there. My life story, my history. I'm a programmer. I've blown more accounts than you've had hot dinners. I've spent tens of thousands on training courses, indicators, EA, I've done everything. In 14 years, I traded unprofitably for a good 10 of them. And then I decided to scrap everything and go, right, this is all a load of rubbish. I've wasted 100 grand or whatever. Surely some people are making money out of it. And I found all the bits that made sense to me and that worked, and I combined them all into my own strategy, and now it works. And that's what I tell everybody to go and do. Yeah. Every individual human being, I'm just going one short on DAX. I'm just going to put a sell stop just under that low. It's going to add one into that because I think we're probably just taking this high. Yeah, just I don't. It doesn't work that way. But every person, every trader is different. There is nobody. If I taught you a strategy, if I taught everybody, how many have we got in here now? 36. If I just taught all 36 people a strategy now and said, come back tomorrow with your results, there would not be one trader with the same P&L. Not one. 90% of them would have a loss. Yeah. Because that strategy works for me. It doesn't work for you. Because I'm not you. I don't know what your strengths and your weaknesses are, what time frames you're going to be able to trade on. Some people are made for M5 scalping. Some people can and will never do it. But anyway, go and watch the Bootcamp and make up your own mind. Yeah, Stevie, I've been trading 20 years on and off. These strategies are the best, bar none. Yeah, because my strategy. That's the thing, Steve, isn't it? I have got a strategy, but the strategy isn't normal. You know, this is what they say. All these courses you do, and this is the thing I love about courses. Every single course has got a section on psychology. And there's so many of those courses that tell you to do the opposite of what everybody else is doing. And yet the course teaches the same thing that everybody else is doing, but it tells you to do the opposite. And it thinks the thing that it's got is the opposite. There is only one consistent thing in every single strategy out there that fails, and it's a stop loss. Or it is the trader. There's only two things that screw you up. Either you screw you up by over trading, revenge trading, or just doing it wrong, or a stop loss stops you out all the time and loses and basically drains your account back down to zero, doesn't it? Those are the only two things that make people fail. Remove one of them, and the other one gets erased, which is the basis of the bootcamp. And, you know, and when everybody says, "Oh, that's absolute craziness," and then they say in the bootcamp, give it 6 weeks. Go and do it for 6 weeks and come back. And if you haven't made profit, it's not for you. If you have made profit, well done. You just joined the club. You've just learned what everybody else isn't doing. But, you know, make your own mind up. I get so many trolls. I get trolled every day, constantly. YouTube comments, Telegram. I banned someone this morning from Telegram because he couldn't make a purchase on MQL5. And he started getting aggressive and nasty and, said the indicator's a load of crap because it repaints. Well, it's because you don't understand market structure. Rubbish. I can't even purchase it from the marketplace. Well, you can't use a credit card. Is that my problem? No. Good luck as a trader. If you can't use a credit card, operating MT5 is going to be a bit of a step above you, mate. Bye. Kicked him out. Got moody about it. Then he showed me a certificate of how he's a funded trader with FTMO. If you're a funded trader with FTMO, what the hell are you doing on MQL5 trying to buy a $49 indicator? Utter bullshit. Honestly, sorry. I get so many trolls. And Robbie, I'm not having a go at you, obviously. But people that come in here and accuse me of this, that, and the other, take a running jump. I couldn't give a monkey's, honestly. I do what I do. If you don't like it, don't come. It's free world. There's 1,000 other live streams out on YouTube now. Go and find one of them. I really don't care. I'm not being nasty, but, it's only so much. So many times you've been told you're wrong when you prove yourself right for a year live. Anyway, I'll carry on. I just wanted to know whether scalping is bad and swing trading is good enough, or you just prefer position trading. I prefer position trading. That's all I do. I don't know. It's not. That's a lie. Total lie. I do scalp as well. Mainly on futures, but also on my funded accounts. I scalp. I do both. But I play the prop firms in the respect of I spend £5,000 to £10,000 a month on prop firm evaluations, and I withdraw more than £5,000 to £10,000 out of them with the ones that I pass on. The ones that I fail on, I throw away and do another one. That's how you make money out of prop trading. You can't hold an account in a prop firm. It's not true. You can, but I mean, it's very hard to hold an account in a prop firm for 3 months because the market won't let you hold an account for 3 months in a prop firm because it is in control. You are not. Again, covered in the bootcamp. Consistent scalping for living is nearly impossible despite 20-year-old Lambo gurus. Told you, yeah, exactly. There's some people out there that scalp. And my trader Tom, which we talked about him yesterday. We talked about him a few times before. Trader Tom Hugard, is a very experienced scalper, and he is absolutely amazing. But there's very few people can do what he does. Very few. And I have utmost respect for him. But it's very hard work. I do it in here, but I can't do it consistently with my own account. I revenge trade, which is why I use other people's money to do it, because I don't care. If it costs me $500 to get a 150k account and I blow it 3 times, the next one I pass, I can draw out $5,000 from. I've made 3.5k. That's how you work a prop firm. So is it worth getting a funded trader account? Well, I think I just answered that one, didn't you? Go watch the free bootcamp. Yeah. Right. There's your problem. Yeah, Diamond. Don't get into religious conversations. Edna, 30 days to make 100% on your drawdown limit. If you have to ask, you are not ready. I don't know what that one means. It's the trader that makes the money, not the system, not the strategy. It's you. This is the difficulty. Man, I lost so much money in the last 5 years as I kept to my losses and took my profits within an hour. Yeah, holding your losses and taking your profits too soon is a massive problem. I've been getting frustrated and feel like a loser. Yeah, that's fine. That's exactly, again, watch the boot camp. All the problems you have as a trader are here. Here he is. We've got him. I'm so excited. I've got him. Greg's here. Hello, Greg. What's he talking about today? I love Greg. Yeah. And of course, your opinion is the one that makes the money, isn't it? So just going back to what I said about those who can't teach, I know it can be done. I've trained hundreds of thousands of people, and my education business makes me a millionaire, and I have a Rolls Royce. Sorry, skip. So yeah, the problems with traders. There you go. There's over 160 slides, so if you're going to watch it, make yourself a cup of tea. Right, so these are all the problems you've got. And what you've just said, Robbie, is one of those problems. Yeah. You take your losses and take your profits too soon. Yeah. So this is what position trading, in my opinion, fixes. Fear of missing out, system hopping, trying to pick tops and bottoms of ranges, trying to pick the pullback in the trend, trying stopped out all the time on most entries, which is obvious. If you put a stop loss in the market's going to take your stop loss because it moves up and down. Not being able to hold on to winning trades. There you go. Not being hold on to winning trades. That's one of the problems. All of the above is solved very simply. And it's all to do with this thing, timing. And this is what I keep saying all the time, every day almost. Market goes up, market goes down, market moves through time. We know that's going to happen. We know it's going to do one of those two things, but we don't know when it's going to do that or that. Yeah. This is what every system, every strategy, every way of trading out there tries to teach you, to time an entry to make a profit. That is the only thing that nobody can do apart from the big banks. And even they can't do it because they've got another 9 banks trading against them. Yeah. So go and watch it, honestly. And it will either change your life or you'll look at it and go, this isn't for me, and you'll move on and you'll keep moving on, and that's fine. And you might find something that works, but it will probably be something you've made rather than something someone else has made and sold you. It'll be a combination of other things that click in your brain. But there's good news. There's a way to do this and to be profitable. It's not that hard. Relearn what you think you know about trading. Yeah. You don't need anything to make money in the market. You can literally, and I've done it, haven't I? Hit the button, short or long. I did it the other day, didn't I? On the pound US dollar on this, I basically came in and I hit the sell button, and then I closed the position out at some point later in profit because it got into profit. I hit the sell button there. It went like that, went like that, went like that, went like that, and I took it there. I made a profit. If you'd put a stop in, you wouldn't. Not rocket science. Most here appreciate what you do and what you say. Thank you. Look forward to your opinions every day. I'm not having a moan. I'm just, I've had one of those weeks this week. You might have been able to tell yesterday I was a bit huffy yesterday. But it's because I'd had a weekend of, I shouldn't say it, but idiots. And there's some people you talk to in Telegram and you just think you are never going to make it with an attitude like that. And you're never going to make it if you can't understand how to operate something or Google something. How do I download an indicator from the MQL marketplace? Don't know. If you don't know, why don't you Google it? How do I cook a coq au vin? Don't know. Maybe Google it. How do I set up a YouTube account? Don't know. There's this thing out there that you might be able to find out on. I've given you a couple of hints to it before. It's called Google. And this is where everything goes wrong, isn't it? That's where traders learn how to trade. This is a problem. But there are certain things that you have, everybody wants to be spoon-fed, and it's just like you get to a point where you try and help people and they just go, and that's like the whole repainting thing with the indicator. All the negative reviews I get on the MQL5 marketplace are repaints, pile of shit. But, it does repaint. Of course it repaints. If you wanted it not to repaint, that would mean that the market doesn't move because the structure changes. So if the structure changes, the indicator paints in to tell you what the structure is. Why don't you understand that? No, repaints, it's rubbish. Every signal I get, I lose. Well, it's because you're taking every single because you're stupid. I can't help these people. I just had a lot of them this weekend. So I just was a bit grumpy yesterday. Sometimes, and yet we still make money with opposite trades, getting out on our own targets. Yeah. Yes, bomb, Shell Greg. Yeah, so you couldn't hear Greg. I just realised I had the volume down on him, but yeah. Greg Secker makes a software package called Is it Fast Charts or Easy Charts or something? And he sells the course, he sells his software, and his software basically is just a charting platform, but it comes pre-built with strategies built into it. So it's like you getting MT4, and it comes with the market reverse alerts indicator built in, and there is a training video which teaches you how to use it, which is kind of what I've done on YouTube, obviously. But all that is his strategies built into a trading platform. The problem is everybody that takes that course has no idea what time frame they should trade or whether those strategies click with their brains. So you pay all the money for the course, you pay all the money for the software, you try and trade with it only to learn that you're not a trend trader and 80% of the strategies are trend based. Well, you can't do that anymore. So you have to go and now buy a mean reversion course from somebody else. That's basically what all the courses do. Greg is just the master marketer, and he has worked in banks and things, so I'm sure he's made a lot of money trading. It's just I think he probably makes more money now out of other stuff. But that's he's fair play to him. People, I guess, do everything, and a lot of people will make money out of what he teaches them, and if they can do that, that's brilliant. Cash flow. It means on his 100k evaluation has a limit of 10k. His target is 10k, which means he needs to make 100% on his capital in 30 days. It's a punt, no matter which way you look at it. Yeah, evaluation accounts are a punt. It's all a game. It's all a game, prop trading. You just need to know how to play it. And it's not easy either. Do you think position trading indices on H1, H4, D1 works for prop firms? Yeah, so I tried prop firm position trading, and I blew the account, didn't I? After I think I was about 1.5% away from target, and I got squeezed on something. I can't remember what it was. I got squeezed on something, and I was a little bit over leveraged, and I blew the evaluation. I was close. So, like anything, you can position trade on evaluations. It will just take you longer. And I think that's the key, is the time element. But when you get into a squeeze, if you get squeezed on the pound US, for example, or the Aussie New Zealand, and the trouble with all prop firms is that daily limit of whatever it is. Yeah, if your drawdown hits that, that's when you blow. So you are, and like I say, timing. We can't time when the squeezes will happen, can we? This is the problem. So again, try it with a very small prop firm account. Are you going to port your market reversal indicators to Ninja? No. Ninja's for futures. Futures trading. By the time you've got a reversal alert on a futures market, you've missed the move. Too slow. Futures is all about price action and order flow and footprint. There's no point in having it on Ninja. Now, I watched this dude Raja Banks, who made 6.5 million this year from 50k. You're right, he must be a fraud. Yeah. Robbie, I make my 5% a month not doing what Raja did, and position trading. Position trading doesn't work in prop firms as well because of the drawdown. You can't control the drawdown, basically. So, but yeah, Raja Bank. I watched Raja Banks a couple of times. I see him take the odd trade, but I don't know. No idea. I don't really care what other people do. I just have a problem with people that tell this industry, and the only reason I have a problem with people that tell this industry they make 6.5 million from a 50k account, unless he's got an audited P&L that I can look at, it didn't happen. And if he's done it, that's fine. I don't have a problem with it. But so I can do that. If you give me a 50k account, I can make 50k in a day. I will be gambling, obviously. And as like I said earlier, there's nothing wrong with gambling. I like gambling. I play poker. But I won't make a living out of it because I'm not consistent. You can't be consistent gambling. So yeah, anyone can have a lucky. I can walk into any casino right now with 10 grand, put it on a number, and it could come up, and I'll win 36 to 1. Thank you very much. I've just got a lovely gap up on DAX for some reason there. I think that was my broker platform. Actually, but yeah, I don't know. Go and watch everything, literally. Robbie and everybody, obviously. Go and watch my stuff, watch Roger's stuff, watch everything. And the bits that make sense, pull them all together and make your own system or strategy. Yeah. Roger will do things you'll like, and he'll do things that don't make sense. I'll do things you like, and I'll do things that don't make sense. So take the bits you like at me. If you don't want to use the market reversal alerts indicator, but you do love the concept of ADR, just use ADR. If you love RSI, but don't like the 14 and prefer the 21, use the 21. If you don't like the RSI and you prefer a CCI, put ADR together with a CCI and use those two conditions to enter a trade when you get a bullish engulfing, because you like candlestick patterns. Or wicks, if you get a long wick at ADR, take that as your signal. There's all sorts of ways of making money, but the thing you will learn from the position trading bootcamp is that the only thing that stops a strategy working is a stop loss. And you cannot trade with 1% risk per trade. You trade with a tiny risk that has an insignificant impact if it goes against you, and you manage it. Raja takes unrealistic risk. He's not a good model for people who want to really learn how to trade for a living. Yeah. This is what everybody wants, isn't it? It sells. And again, Raja sells a course, doesn't he? Which is fine. And if the course is good, it's good. That's fine. Everybody's got to do courses. I don't have a problem with courses. My problem with courses is they all teach the same thing usually in a different way. And they don't explain how this thing works and what drives this thing. They all courses you see out there, they focus so much on the mechanics. Oh, you've got an outside bar there. So if we close inside on this candle, you put a pending order there and you take that, you have your stop up there. When you've moved down 10 pips, you move stop to break even, blah, 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 blah. They focus all on the mechanics and their strategy. They don't focus on why has this thing created an outside bar? What is an inside bar? What does it mean? What does it mean when we get a contraction? Yeah, it means this moves over and we're building up for the next move. When there's an explosive move, why was that explosive move formed and what's likely to happen after the explosive move? That's what courses should focus on. When this thing is drawn, what does it mean? It's the cash open. It's where all the orders are placed from overnight. That's why we get a big bar, because there's more orders going in. Does it mean the direction of the day? No, of course it doesn't. It just means that this is what we had overnight. It just doesn't tell you all of that stuff. None of them do, because they're not interested in that. That's my problem with it, education. But I only know that because I've done them all. I haven't done Raja stuff. I haven't done any recent stuff. Everybody wants to be spoon-fed. Yeah, this is it. But you can't be spoon-fed in this industry. It doesn't work that way. Spoon-fed is if you want to be spoon-fed, it means you haven't got I don't think, the mental attitude for trading, because you can't get spoon-fed in this industry. Because if you're a baby being spoon-fed applesauce, that's fine, isn't it? But you're not being spoon-fed. You're being spoon-fed something that is going to risk your financial capital. If you're spoon-fed the wrong thing, your financial capital is going to vanish, which means you've got to replace it with more financial capital. It's that never-ending cycle of looking for the holy grail, isn't it? Because you want to be spoon-fed the thing that makes you money in a chaotic, random marketplace, which is just not going to happen. German gurus have such a cult-like fan base. They get angry at you for questioning Raja's approach, even if they themselves are not profitable. They will defend their guru. Yeah. This is the thing with ICT, isn't it? There's so many smart ICT traders out there that worship the ground he walks on, but are they making money out of it? No one ever shows you them making money out of it. Well, not that I've seen anyway, but doesn't mean it doesn't work. It just means that what they've learned has made them not lose as much money as before. But you can take the best strategy in the world with an 80% strike rate and blow it because you take stupid trades. That's nothing to do with strategy or the guru or whatever. It's to do with the person pressing that button. Yeah, this button here, that button is what makes you the money. When you press it, what you do after you pressed it, that's nothing else. When you blow a live prop account, do they still pay out if it's in profit? No. Nope. I should know. I've blown a few. Yeah, no, they don't. This is why I trade my props. It's taken me a long time to come to to figure out how to do it with the prop firms, but this is why I trade my props aggressively, and I trade them up to a limit, and I stop trading them because I had what did I have? It's about 2.5K in one of them, in one of my Forex funds accounts, and I traded it down to 2K to $500 odd dollars, and I had a couple of £100 in additional drawdown left for that day, and I thought, oh, screw it, I'll go for it, and I hit the button, and I got stopped out in that position and blew the account. I still had a few $100 in the account, but my realization was I had 2.5 grand, and if I hadn't have pressed that button, I'd have 2.5 grand now. So what I do is I trade my accounts up to somewhere between 2 to 5K, and I stop, and I get another one. So they actually make more money out of me, because if I get a funded account with a prop firm, trade it up to a level where I'm happy to extract that money. I've got to wait 8 days with E8, for example, to withdraw my cash, or 2 weeks. So what I do is I buy another evaluation from them and trade that, because I don't want to touch the one that's got the money in it. If I do, I'm likely to overtrade it. And what kills traders? Overtrading. So to stop yourself overtrading, you have to literally shut the account down, log into another account, and you carry on trading, because you want to stop trading. It's like a drug, isn't it? You've got to trade. If you trade the account you've got all the money in, you'll blow it, because it's tight. The rules are tight. When you blow a live property, oh yeah, I just found a moment. Impulse breakouts. This is based on experience. Raja trades impulse breakouts. Okay. This is based on experience, intuition, and feelings. Yeah, discretionary trading. That is what people that make money like that are doing. Yeah. Tom Hugard is a discretionary trader. He has a set number of patterns as things he looks for, but it's institution and feeling. When you get in and out, it's a feeling. I feel like I should be doing this now. That's the only way you'll get that is by watching charts. You know, it's like, what should you be doing now? My head is telling me right now I need to be hitting the sell button, because I've seen that forming. And the only reason is because I've seen that forming for a decade. I've no idea if it will work or not, but that's what my head is telling me. When you see a propulsion gap like that retesting, it says I should be trying to buy here. Whether it works or not, I don't know, but it's all just stuff you've seen. You know, you've just seen it playing out over and over again. These big candle down. It's either going to go one of two ways. We know that. But a lot of the time after you see a big flush like that and a retracement into it, that's a fantastic place to sell. But other times it isn't. And you just don't, you know, it's an intuitive thing. And this is why they call it discretionary trading. But the trouble with discretionary trading is if you are not a discretionary brain, i.e. you are influenced by rage, this is where it goes wrong. When you take a trade, then it goes wrong 5 times on the trot. You have to stop. That's why you need multiple funded accounts, because when you get to that point where I've lost 2 grand today, I have to shut that one down and trade something else, because I want to carry on. That's me, you know, everybody's different. Impulse breakouts are, you know, this is what the wide range bar indicator is, isn't it? It's an impulse breakout. Very, very, very good momentum strategy for scalping. If that's what he does, it's great. So I don't really know what he does. I haven't really watched in any detail. So can you please talk about order flow and footprint? I trade ASX 2000 Aussie index, all right. But there's no footprint for it. I can't really go into footprint in detail. It's too much. There's a course on it. If you want to do a course on footprint, you need to go and buy Jigsaw. You need to buy a course on it. But again, footprint and order flow is discretionary. How there's so many ways to trade footprint and order flow. You know, again, it's discretionary. How you use it, how you see it, is up to you. How can you use it to your advantage in relation to the price action? I think I'm quite okay with it, tech analysis, but don't know about order flow or footprint. I don't trade footprint charts. I don't use them. I can't find a use for them personally. But order flow, it's literally just momentum. So, for example, where we are, this is called the value area high and value area low. So this is your value area high. So this is an area of extreme. Everything to do with order flow should be looked at as in relation to a bell curve. Yeah. So you've got a bell curve that goes like that. Right. Flip that bell curve on its side, and you have order flow. Yeah. So the day's order flow is a bell curve. The vast majority of today's price action has been within this area and this area. Yeah. So this is the vast majority of volume order flow has been achieved in that area. When we get to extremes, which is this green area here, you see the volume peters out. Yeah, we got 1,000 contracts plus all the way through that entire thing pretty much. Here, 600, 500, 300, 700, all the way down to 83 contracts at the bottom. Yeah. So one way to use order flow is right now you should be selling the ES, which is what this is, because we are at the extreme. With a bell curve, 80% happens here, 20% happens at the extremes. Yeah. So the theory is, as we trade out to the extreme, we want to trade back in. So a lot of people, as soon as we hit value area high, will start to sell, and they will get out when we get back into the value area. That's one way to use it. Another way people use it is they look for nodes. You trade into a node and you bounce off that node. Yeah, because there's a high volume of order here that push price higher. So when we return to that area, the people that bought there will add to their positions and push back up again. And this is kind of like an impulse retracement. Yeah, so people use nodes. Some people buy high breakouts. So this is a strategy I use quite a bit, especially at the open. When we break that high, yeah, this is the high of the session. Nothing's traded above that level. Pending order there, we will usually get a flush out the top, get out somewhere up there. Often it will then trace back into this area, retest the node, the biggest node in that section, and then bounce back off of it again if we're going to continue higher. And again, all this is market structure. Yeah. So we have a node, we break out, we retest it, we push higher. We make another node, we break out, we pull back, we retest it, we push higher. That's the high of the day. When we break out of that, we'll come back, we'll retest, and we'll push higher. That's one way you can use order flow or markets, volume profile, which is what this is. But there's 1,000 ways you can use it. You can use this, which is just the tape. Yeah, somebody's dumping large orders in, large contracts. Somebody's just dumped 50 contracts at 21s. Yeah, someone's just dumped 50 contracts short there. Someone's dumped 37 short at 2250s. There. Yeah. So what's that tell you? There's a load of sellers here. Which way do you think we might be going next? Considering there's not been one bulk long order gone into this market in the last 3 minutes, which is what this is measuring. We're probably going short, aren't we? So a lot of people use this when they see large orders coming in. They will enter 10 contracts short and they will get out 4 ticks down for X profit, $200, $300. That's micro scalping on momentum, or it's perceived momentum. We're expecting shorts because the market's dumping. A lot of people will see this and they'll go, everybody that's long is not staying long. They're puking their orders, which means they're going short. Remember, everybody that buys has to sell to get out the position. So a large volume of orders means actually we're going high a lot of the time because it's everybody puking their orders, which means that the volume shifts in the opposite direction. As I say, I can't really teach you all of this because it is a multi-day course in itself, and there's plenty of people out there that teach you it. No one will teach you a strategy, one strategy based on this. Yeah. They will teach you how to read order flow, which is what you learn. You learn what the tape is. You learn what the nodes are. You learn what the value area high is. You learn where the open is. You learn what spoofing is. You learn what you're seeing, and you watch what you're seeing, and you figure out a way that you can make money out of this. But there's no one strategy that works all the time like everything else. Some people position trade. So they will position trade into a run. So here we'll have people sell, 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 sell. And eventually we'll retest if we break out. Then they'll exit. This is just literally a million ways to teach order flow. But at the end of the day, it's a completely discretionary. When you hit the button, it's discretionary. Yeah. And combine it with, support and resistance levels in charts. There's, but it's such a different thing. Such a different thing. Cash flow. ICT's disciples are everywhere. He's everywhere. He's got eyes everywhere. And he's even tried to sue some of them for reteaching his ideas, who he was taught by somebody else and not his. Right? We did this the other day, didn't we? What do you call this? I asked what you call this. And people said, oh, fair value gap. No, it's not. It's a wide range bar. It's created by somebody in the 1980s. It was renamed. But this indicator, as I said, and I pointed out before, is called the WRB hidden gap, wide range bar. Call it what you like. It's a propulsion candle that is larger than the preceding candles. It's a breakout. Give it a fancy name if you want. At the end of the day, that's what it is. You can't sue somebody for identifying price has moved fast over a time period. You didn't invent market movement in a time period. No one did. Try suing someone for that. I don't think it'd ever work. It scare people off, isn't it? Anyway, can I also say order flow is the same as volume profile? Yeah. It's all the same stuff. Order flow is volume. Order flow, volume profile, footprint charts. It's all just a way of recording transactions. This is the volume profile. This is the order flow. This is the ladder. This is basically the what do they call it? The tick. I've forgotten the name of it. Oh, wrong one. Oh, that's price squawk. Don't want that. No, go away. I can never close price squawk down. It's really annoying. Do I have to click that? Yeah. Yeah, tape, reconstructed tape. Sorry, I was trying to remember what it's called. So this is the tape. and this is just orders, but it's order flow. It's the flow of orders, like there's buyers coming in now. So you see this ticking up. Yeah, it's this. See those 3 orders. Price jumped like that when those 3 orders came in. It's the flow of orders. Yeah, there's all sorts of names for it, but volume profile is just a recording of the order flow at a price point. Yeah, this is your VWAP, volume weighted average price, and this is your point of control, which is where the most volume today has been conducted, 1949 contracts. This is the highest volume for the day, the point of control. And quite often price will bounce off of the point of control and bounce off of the volume weighted average price because it's deemed a good area to purchase. But what you do is when you get down to this area, you wait and you see if a load of blues come in. If a load of blues come in, it looks like the market's buying up point of control. Let's say there's hundreds of strategies, hundreds of ways to trade order flow, but it's all completely discretionary. But that's futures. Futures is a lot more complex. A lot more complex. Micro scalping doesn't work for long term. No, it does work. Well, it does work for long term. Scalping the market is just a. If you think about scalping the market, right? I'm trading an M5 chart here. I'm trading a 4-hour chart here. Yeah. Look at this price action. It's the same. Market's pushed up, market's pulling back. Market's pushed up, market's pulling back. This is a 5-minute chart. This is a 4-hour chart. Price action, market structure is the same. It's fractal. It works the same way on all time frames. Scalping, you are in and out faster. So the trade I take short on this M pattern reversal here, this one, I get out here in 10 to 15, 20 minutes time. When that plays out, I will get out in 2 to 3 days time. Same thing happening on all time frames. It's just, this is called scalping because you are in and out, you're taking a scalp fast, right? The problem with this time frame is it's all random chop. You're trading order flow. You're trading basically what these guys are doing. And this is algorithms dumping thousands and thousands. We can see thousands of contracts at each price point. You can't see it there, can you? Yeah, each price point, we've got thousands of contracts. And this is quiet. The market's not even open yet. So that's what's happening underneath the scenes. And you're trading this chop. Where this is going long term is down. Whether or not today it goes down, don't know. Could go, we could paint here like these candles, right? These two, like that shooting star and that spinning top. Yeah, that's an 8-hour period. That is an entire session over here of this thing going like that. Yeah, you could get chopped around 10 times and lose 15 trades in that chop, scalping. Whereas the guy trading this time frame is just waiting for that range break low and he's taken 1 trade and he's in profit. But you in here were going like this. Psychologically, and this is why I say it's not a long-term prospect for most people, psychologically, you can't handle this because you burn out, your brain fries, you get 5 trades. I blow accounts, right? I've blown prop firm accounts in a session because I take 5 trades with 1% risk and I lose 5 on the trot. I short it here, get stopped out. Looks like it's coming back down. I short it there, get stopped out. We broke into the downside. We've pushed back up again. I go long here. Oh, I can't say that because that's a winning trade. But let's say I took that one and got stopped out on that one as well. Pushed up, came back down, took a trade there, get stopped out there, right? So just say I've lost 5 in the trade. So I've lost 5% of my account. I've blown the prop firm account. because I've had multiple signals to get in. Slow, longer time frames will give you one signal. And this is why you should trade, and this is why I position trade 4-hour charts. Because I don't want to get 10 signals a day. I want to get in and I want to give the trade time to put itself into a profit. Here, you've got a stop there and an entry there. That's like 21 pips. Yeah, this thing moves 230 in a day. I've just said I'm gambling on the fact that this isn't going to move 1/10 of its normal daily range in the next hour. Of course it's going to. High probability of that happening. If I take a short on this here, that stop is 50 pips on 188 pip instrument. So that's only 1/3 of its entire daily move to take me out. This is 1/10 of its move to take me out. This is why everybody gets killed scalping, because your stops are like that and the market is like this. Look, one candle. You had a stop there and an entry there. That candle, if that happens again, it's taking you out. You're dead on one 5-minute candle. Imagine that happens in one 5-minute period. You've just lost 1% of your account. Now you're cross. Take another trade. Now you've lost 2% of your account. Right, I've got to get 2% back now. So that means I need a 3-to-1 risk reward trade. I've got to get all the way down to here to just break even today. Psychologically, very few traders can do this. And I struggle with it. I hate scalping. It's just at the moment, the market is just not right for position trading quite. It's just a little bit too erratic still. I started scalping when we started all this financial mess. And I've had to stay scalping because needs must. Got to pay the bills. I'd hate it. I hate scalping. Which is why I'm kind of hybrid position trading the DAX at the minute. Anyway. I can't say if it works. Like I say, your question was micro scalping, you said doesn't work for long term. Can't answer that. I don't know if it would work for you or not. You just got to try it. Try it. Try everything. Try everything. But don't expect to get a Lambo, which is what your original thing was. Yeah, can you make $1 million? Not very easily. I'm just going to stick with Forex and scalping indices. Yeah, just futures is great, but market structure is king. You know, you can't. There's 3 deniable facts. Price goes up, price goes down, and it moves in waves. We know structure exists. We can see it. Yeah, we can see structure on charts. So market structure, and when something's reversing, giving you a bias, and the fact that it's, you know, for a fact when you do something, it's going to do one of those 2 things. The fact that happens allows you to plan for those instances. If I get in short here, the trade is either going to work out and I'm going to take my money, or it's going to push up against me and likely find a resistance area where I can add another position and then get out and take my money. Market structure is all you need to be able to get a button press into a green position. That's what your goal is, to get a green position. Not to be right, not to get a 3-to-1 risk reward every trade. Your job is to put profit in the bank. Not focus on getting a 10-to-1 winner and posting it on Telegram saying, oh, look how amazing I am. I have them. I've had some amazing ones. I had a 10% profit trade last month, didn't I? Yes, I bragged about it in the Telegram group. Just because it was amazing. That's the only one I've done this year. I can't replicate that. Because the market is what market moves there. I can't get a 10-to-1 winner. If the market doesn't want to go 10-to-1, I'm not going to get it. Can't force it. I'm not in control. I'm driving a truck and I've got no steering wheel. I go where I'm told to go, where the market takes me. I was disappointed when you said scalping doesn't work. Scalping on a 30-minute to 1-hour chart. Yeah, I mean, this is the other thing you've got to bear in mind. Scalping has got a different meaning for different people. So I know, just coming back to Raja Banks, I know he trades a 30-minute chart, doesn't he? And mainly, I think, on the pound yen, right? So look at that bearish engulfing. I mean, I don't know if it's, I have no idea what his strategy is, but let's say you took that bearish engulfing as a scalp, stop above the high, 1-to-1 risk reward on a scalp, 1.5-to-1 risk reward on a scalp. You're out 3 hours later. That's an intraday trade. So you could class scalping as intraday trading. Scalping is just a term we use for in and out quick. Yeah, in, out, done, thank you, money, or loss, whichever it is. But it's a short term, quick in and out, isn't it? You can scalp on, and typically scalping is people look at M1, M5 for scalping. For M15, M30, you could scalp an hourly chart. Yeah, you could scalp bearish engulfings on an hourly chart, couldn't you? Or a 3-bar reversal. It's a beautiful 3-bar reversal there, which took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours. So that's less than a day. You could scalp that hourly, couldn't you? It's just a term for getting in and out. The time frame is irrelevant. The market has no interest in time frame. This time frame means nothing to the market. The market, under the hood, is doing this. It's executing contracts with market participants. Yeah. People are buying it. People are selling it, right? How we measure price movement is a completely made up thing by us, because we as human beings need to compartmentalize things. And movement from 115,425 down to 112,925, I need to have a way to view what happened when this happened. I can use a time frame to do that. If I use the daily time frame, I see 2 candles. If I use the 5-minute time frame, I see loads. But this has got absolutely nothing to do with what's going to happen next at all, has it? You get a reversal alert. There's a 50-50 chance it's going to do an up or a down. That's it. Whether it does it now or does it 25 minutes later, I've no idea. No one has. Whether that retest is going to hold off that reversal alert, no idea. If you look at this on a higher time frame, you might think this isn't a good time to get in. Because if you're a 1-hour trader, when that reversal alert came in, you saw an inside bar. Should you be trading short on an inside bar? No. Not until it's broken that bar, then you can go short. So the reversal alert on M5 that we just saw, you'd never take that if you were trading 1 hour. Again, it's just, time's got nothing to do with anything. You can't time it. Stop trying. That's the thing you've got to stop. If you could time it, we'd all be millionaires, like Robbie says, yeah? If I could time the market with an indicator that told me when to get in and get out, I'd be a multi-millionaire and I would not be sitting here. We can't, because look at, bearish engulfings. What a fantastic chart pattern of bearish engulfing is. Did it work? No. That one did. The fact that price goes up and then it comes back down again, has that got anything to do with the direction of where it's going next? Nothing, is it? Nothing to do with it. All it means is in that hour it went up, and in that hour it went down. What's that got to do with anything? But if you want to scalp, you've got very little at your very little tools available to you, apart from a candlestick pattern and an area we have been to previously, support and resistance. So price action at support and resistance is the only thing you can really use as a scalper. But whether or not the bank has got 20,000 contracts to pump long today or not, you don't know. So you've got to be lucky and get in at the time the banks are selling. We can't time that, can we? So basically done the boot camp this morning, haven't we? Thanks, Robbie. Your comments have been very productive. I'm just going to also swing trading on 4-hour chart. Yeah, swing trading. The higher the time frame, the more reliable the signals. The less signals you're going to get, the less money you're going to make. Do you want to be right and make money, or do you want to be fast and possibly lose? It's just a personal thing. There's no right or wrong time frame. Like I said, time frame is just a way of plotting how long it's taken for something to get from A to B. Doesn't mean necessarily what's going on in the future, does it? Mentioned about wide range bars, FBGs, whatever you call it. What's the trade setup? The wide range bar will be respected, or it will get filled later on. So there's a part in the bootcamp about wide range bars. But if you look at wide range bars, they tend to be an area that price is attracted to as a magnet. And that is purely like here. So there's a wide range bar there. So we pushed down on impulse. Price came back up into that wide range bar and then collapsed back down again. Yeah. So that is a retest. So everybody that forced the market short here, so the banks sat there, accumulated, did a liquidity run, came down, pushed the price lower. They're short. A wide range bar means the market is short. Yeah. That's why it moved down, because the banks have taken a short position. Do you think they want to let that go into a loss or a profit? So when the banks have made a short position, they've decided to take the market short. When we move back up into the area they started shorting, which is here, they tend to add more shorts to their position to push it back down again. Yeah. When they finish the short position, the buyers will come back and attempt to get back through that level. Sometimes they will, sometimes they won't. So again, lots of different ways of using them. A scalper would have seen that wide range bar drop down to M5 and taken that long and be in and out and done. There's no right or wrong. Look at this one here. Accumulation, propulsion, retest. Again, you do your due diligence. Go and look. Which is why, if this gets down into here today, I'll be interested in exiting my position. Why? Because I've got a feeling potentially the banks might step in and try and take that longer from there. Don't know. They're just areas on the chart that something's likely to happen in. It's this. Yeah. It's this area. This blue area. All this is a propulsion move higher today so far. Depending on what time frame you look at, you'll see a big long candle today. If you look at the 4-hour chart on the ES, you'll see a big long candle. Yeah. That is that purple bit. This. Just a representation of what's going on in it. But there's no, propulsion, retest. Propulsion, slam through it. Yeah, they work, they don't work. It's just areas you need to pay attention to. Propulsion, retest. But again, every time frame's got different ones. This has worked perfectly. This one, look, accumulation, propulsion gap. I call it propulsion gap, wide range bar, FBG. Call it what you like. It's a large candle with a lot of orders taking price in one direction. Yeah. Whoever went long here is still long. When you come back and try and take them out, they're big enough to make that move happen. They're big enough to defend that position and push price higher, which is what they do. And then they push price higher again, make a new high. We come back, the sellers try to sell. The buyers go, no, we want more. But what is that? Market structure. Same stuff. It's all the same stuff. Doesn't matter what you look at. I say it's all the same stuff. You just mentioned about, yeah, just done that one. Last question. Can I be profitable just trading market structure, price action, purely technical analysis? Yes, you can. You can do whatever you like. It's an impossible question to answer, Robbie, because I don't know you as a trader. I don't know how you're going to trade and what your mentality is or what you want. If you want to make fast money, no, you won't be profitable. Trading market structure or price action or technical analysis. If you are happy to take things slow and just get into a position with a bias and wait, you will. And that's what the bootcamp teaches, is to give your trades room to move. That is all I've found that is consistently profitable. And it uses and it doesn't matter what you use. So for example, I use the primary entry mechanism for me is a condition indicator, which I use RSI, and the market reversal alerts indicator, which is my signal indicator. And then I use confluence of support and resistance. I might see a propulsion gap I like, or yesterday's high, or an ADR. So ADR is also a condition indicator. The condition of the market is it has extended its average daily range by 125%. That is the current market condition. When it does an M pattern reversal, that gives you a market reversal alert, which is a signal. So you have a signal indicator, which signals when a condition is met. That gives you an entry into the market. Whether that's going to come down or not from there, I have not got a clue. If you want to use a stop loss, put it up there and then pick somewhere down here to get out. If you use a stop loss, likelihood is at some point you will get stopped out before you get to your target. Why? Because when you enter a position, your target is always miles away. Your stop is always really close. That's why stop losses trigger, because they're always closer than your target. And then everyone goes, so if I used a tiny reward and a massive stop, I'm more likely to hit the target more often. Yes. But when you have a bad run of 10 trades that goes that way, it will wipe out every single piece of profit you've got. So that doesn't work either. So the answer to the question is, I can't answer the question because I don't know whether or not you will accept the fact that you're going to continue to use stops and you are going to be psychologically good enough to accept those losses, those 10 losses in a row, which lose you 10% of your account, and then hold on for the 20-run winner. I can't tell you because I have no idea. And you can't answer that question until you do it. So try it. That's what you've got to do. There is not a system or strategy out there you can pick up right now that's going to work for you. The reason, and there's a system hopping video you need to go and watch as well if you haven't watched it yet, which is why am I system hopping, which I think is in Live from Extracts. No, it's not. It's in that one. Oh, I don't know where it is. I've got so many videos. One of them, training strategies, is probably in there. I don't know. It's called system hopping. Anyway, that's why everybody system hops, because you get a brilliant strategy. And then this is what I get all the time with this market reversal alerts indicator. People come into the Telegram group, people DM me and go, this is amazing. I've just taken 10 trades on the 1 minute chart and every single one of them has worked out. I've got a 5-to-1 risk reward out of every trade. Fantastic. Never hear from them again. Every now and again, I get a message saying, what's going on? It always suddenly was working and now it's not. I've just had 15 losers in a row. Yeah, that's trading because you're trying to buy the bottom of a trend. You're trying to catch a falling knife and you're getting reversal alert after reversal alert after reversal alert all the way down here, and every single one of them's failing. That's what happens. Market moves up, market moves down. You're just happening to buy constantly in the wrong direction. I can't stop you doing that. The indicator can't stop you doing that. Its job is just literally to tell you when there's been a reversal pattern. Whether it's going to hold or not, I don't know. But what I do know is if you get in on that reversal pattern and it doesn't hold, and it gives you another one down here that does hold, you can enter there, have an average there, and exit your position with a profit. That's what I do know will happen. That's why I position trade, because I don't know whether that's going to hold or not. So why not use the things you do know, which is when we get extended. And again, don't take my word for this, right? Do this yourself. Go onto the chart. We'll do it now. Let's do it with you. RSI extended. Take a short position. Did it work? Yes. RSI extended. Take a short position. Did it work? Yes. RSI extended. Take a long position. Did it work? Yes. RSI extended. Take a short position. Did it work? Yes. And there. Long position. Did it work? No. Okay. RSI extended. Take a long position. That hasn't worked. What do I need to do now? I need to put another position in the market. Actually, well, that might have worked. You might have got out there. I don't know. If not, though, we wait for price to move down around about 45 pips. So somewhere around there, we wait for the next reverse alert to kick in, which would have been here. So you've taken a second position here. So you've now got one there. You would have had a reverse. Actually, you wouldn't have had a reverse alert in there. Or would you? Probably not. See, that would have been your first signal. That wouldn't have given you a signal. So let's pretend it did. You got in there. This is your second position, the next reverse alert. Yeah, your average is now here. You're in profit. But let's say you hadn't taken that one because there was no reverse alert signaled there. You would have taken along here. Actually, no, you wouldn't. The first reverse alert was there. So that's your signal. So you would have got in there. Yes, it worked. Debatable whether you'd have got a signal there, but yeah, but go back test it. Watch the boot camp. Don't take my word for it. Back test it. Do it yourself. Yeah. Got extended, came down. Got extended, went up. This is just a condition though. You don't get in because it's extended. You get in because the market's moving in your direction. We got in there because it was extended, but we didn't get in on the 4-hour chart. We're using the 4-hour chart to trade. Yeah, when that is extended. So the very first you would have had was there. So we drop down onto M5 or M15. Yeah. And you take the first reversal alert you get on the lower time frame, which from when we got extended on the 4-hour would have been there. So you'd have taken a short entry there. You'd have sat around for 2 days. Probably got out there. If you didn't get out there, you would have added to your position. That's your entry. You'll have added to your position there. That would have been your second entry. So you'd be in another entry now there. So you got 1, 2 positions on. Oh, just about. That's 43 pips. I wouldn't recommend getting in less than 45, but obviously it doesn't matter because you're out. Yeah. So the condition is the 4-hour RSI extension. The signal is a reversal, a sign of weakness on the lower time frame. But if you'd have used a stop loss, you would have been stopped out on that position. You'd have been stopped out on most of the positions you'd taken. You'd have lost 1, 2, 3% before you made possibly 1, 2, 3% back. So what have you got? Nowhere. What's your thought process now? Oh, this load of crap doesn't work. Doesn't make money. Why doesn't it make money? Because you entered short and you told the market that if it comes up to here, you want to lose 1% of your account. Think about it. I'm going to go short. If the market comes up to here, I want to lose 1% of my account. All right. I'm going to go short. If the market moves up to here, I want to lose 1% of my account. All right. Why not say if the market goes short, I want to make some money when it gets into profit? All right. Why give it to them? Crazy when you think about it. Why do you think the banks don't do it? Because it's crazy. Don't you think this is martingale? No, don't use martingale. Martingale's suicide. It's not martingale. Martingale is where you double your lot size until you either blow your account or, again, this is covered. It's all covered in the bootcamp. We're going. It's quite good, Robbie, that you've come in today because we're basically going through the bootcamp live, which is great. Except the bootcamp's a 5-day long course, so we're not going to cover it in a live session. It's 11 o'clock. Been on for 3 hours. But yeah, basically, you're not going to. Yeah, look, martingale is a very specific. It's a betting strategy. Basically, it's designed for betting for casinos. I think it was developed for blackjack or something originally, but yeah, that's when you double your account. You can use martingale with position trading. It's just that when you get into a squeeze, right? Aussie New Zealand. Look at my Aussie New Zealand position, right? When you get into a squeeze, if I was martingaling this, I would be dead. I'd be blown already. It's lad has just said it. It's what's called dollar averaging. It's what you watch any stock program, Bloomberg, go and watch the Bloomberg channel or anything, you will hear the words dollar averaging used an awful lot. But it's what the markets use to scale in to positions. It's dollar averaging. So when you, and this is obviously what the average on this position is. So I started trading up here. I've got a position down here. My average is here. So this is my average price. So as long as the market takes profit on the move, because the market has to take profit on the move, otherwise the market can't make profit. What's the point in doing the move? I will get out when the market moves. I don't know when the market's going to move, so I average into the move. What's in my favor is a set of conditions, and this is why we call it a market condition indicator, a set of conditions that repeat themselves over and over again. And when that condition is met, the vast majority of the time, that happens. The condition is extended RSI. After extended RSI, the condition is usually a profit take. Why? Because when the market gets extended and stretched like an elastic band, it means there's too many participants in one direction with large profit on their books. That profit has to be turned into real cash to be invested elsewhere. Therefore, they take profit on the moves and bank the money. That moves the market back up again. So my job is to scale in when we know there's a favorable condition and wait for them to do that move. I have no idea when they're going to do it. I know they're going to do it because I can look back in history and see them doing it every day of the week. I just don't know which day of the week they're going to do it. And sometimes I'm stuck in things for a month or so. And that's the case, and that's the case. There's nothing I can do about it. If you use martingale, you will get out a lot faster. And I use, at the moment, because I'm trading H1M5, I'm using a kind of what I call a hybrid martingale strategy, where you're ever so slightly increasing your risk, but you don't double it. If you double it, you're going to die. If you get 8 positions on in martingale, you're blown. If I get 8 positions on, I've got more than 8 positions on here, I'm not martingale. My original position on this was a 0.8. So you can do that, but and you know, if you wanted to pass a proper valuation, you could do that, but you will blow the account at some point. But if you can last long enough to get a withdrawal, who cares? It's not your money you're blowing, is it? But a lot of prop firms have got rules against martingale. If they see you doing martingale, they won't let you do it, basically. So you keep adding positions basically until you're getting profits. Yes, but you take losses as well. So and again, this is what we were talking about earlier, when you get to a certain point in your P&L that you are uncomfortable with your drawdown, which is your risk in the market, you start to scale out of those positions. Again, drawdown control, it's all covered in the bootcamp. And it's the mechanism we use to scale out when we are at a point where we are just too squeezed, which is why they call it a short squeeze. They're squeezing everybody out. So yeah, so you take losses. You definitely take losses. But the amount of times you get into a squeeze that is so harsh that you get to a point where you are taking a loss just because you can't stand it anymore is 2 or 3 times a year, maybe. The rest of the time you're just banking with the market. I mean, Barclays, I don't know, I'm just using Barclays as an example, but Barclays have been shorting the hell out of this thing for a good week or so now. They're sitting here with a 10, 20, $30 million profit on their account. I don't know what they're sitting with, but whoever's sitting there with a massive profit on their account, they're scaling out of it. And they scale in. So the markets, when institutions and funds are taking hedges, they don't go 2.5 million long. They scale in. They dollar average into the hedge, right? And then they dollar average out of the hedge. We're just riding their dollar averaging. So they're doing dollar averaging into the short. They will start to dollar average out of the short. We're doing the same, except what we're doing is we're waiting to take our profit all in one go. You don't have to, though. If today, for example, we get an ADR 150 hit on this. Yeah, so if we move up to there, we get 150 ADR. I will close that. Oh, actually, no, I won't close that. What I would do is I would close that, that, and that. And I would partially close that. And I would partially close that. And I would partially close that maybe to that as well. Yeah. So I will use all that profit that I've made on these trades. And I would reduce my positions here. What that will do is it will move my break even around. So your job is to keep this break even line as close to price as you possibly can. Euro, US dollar. Yeah. So that position didn't work. That position, that reversal there, did work. And now I'm at break even. So what I can do now, instead of taking that loss on that trade, wherever I am, this trade here. So I went short, stop would have been there, stopped out for 1%. Went short, this one worked. So I don't know whether you take profit somewhere, I don't know, wherever you want. But that one, I didn't take a loss. All I did was wait for them to take profit on that move. Or I am waiting for them to take profit on that move. But I'm actually waiting for them to take profit on this move. And if we push down like that, and you don't want to take the profit, add another position and scale in, make yourself more profit. It's up to you what you do. But the fact of the matter is, without going in nuts with a stupid 1% risk with that tiny move, if it doesn't work and it goes up to there, fine, whatever. I don't care, do I? You don't know where it wants. It's what the market does, yeah? It goes up and down all the time. Up and down, up, down, up, down, up, up, down, up, down. Right? All you're doing is you're waiting for it to get into profit. How much profit do you want to take? I don't know. Up to you. Take whatever you want. But just don't give them the money, yeah? Go short here, look. This is an absolute textbook stop hunt. Price pushes up above Asia, pushes down. Everybody goes short. Let's zoom in on this because this is a really good example, actually. I like these ones. All right. Textbook example, Steve Mauro. Don't trade until they've hit the stops. Asian high. London pushes out, pulls back down, goes short, stop above the high. Nope, didn't quite get to my profit. I took my stop. Pushes up, pushes down. Everybody then goes short. Where's their stop? There. Okay, so we've got a ton of stops sitting at yesterday's high. There's yesterday's high. What do? Come up, take out the stops and run with it. Yeah. So the person that took a short entry, a short entry, and a short entry has now been stopped out multiple times. Me, I just get out at some point when it's in profit with no stops, with no losses. But I'm not getting in with nutty position sizing. Everybody is told to use 1% risk. Why is everybody told to use 1% risk? Because the brokers make money every time you hit the button. Yeah, this button here, right? Every time you hit this or this, your broker makes X percent. They make a commission or a swap or both. Yeah, when it comes to the night changeover, they make a swap out of you as well. So it's in their interest for you to get to hit that button all the time. So what should we do? Let's educate everybody that when the market moves down, they put the stop above the high. Why? Because we know that they come up and take the highs out all the time, because breakouts always fail. So let's make them hit the button over and over and over and over again. What's the best way to do that? Let's get them to risk far too much of their money every time they hit the button so that we can grab more of it. Good idea. Let's put out a trading course. Fantastic. And then that trading course got copied. And that's basically what we taught today, is to put these stupid orders in the market like this. Yeah. Let's place an order in the market which is guaranteed to lose us money. Wow, great idea. If you're a broker, hey, let's move the market up to there. Why? Because that guy will give us $12. All right. And that's what they do. And yet we carry on doing it. And this is why the hunt for the Holy Grail exists, because this indicator didn't work. This indicator didn't work. This indicator didn't work. Yeah, I'll go and find another indicator, because there must be one out there that works. Mustn't there? Rubbish. But you have got to have a system. Yeah, and whether you use this or whether you use this or whatever you use, it doesn't matter. Don't buy any of my indicators. Do the position trading bootcamp and then go and buy a load of other indicators or use other ones you've got. It doesn't matter what your system or your strategy is. What matters is the fact that you don't put that in there so that they take it. You want to use pivots. Someone was talking about pivots earlier. Use pivots. Imagine these are pivots. So take a short there. ADR. Right? Use the ADR if you want. Take a short there, take a short there, and take a short there. And wait for the market to come back down again. Because if it gets all the way up there, it's absolutely knackered and it's going to take a profit. Get out then. Use that. I don't know. Use whatever you want. But the methodology is that you don't put an order in the market so that your broker and everybody else in the banks gets rich. That's literally all it is. Simple as that. Very simple. And yes, you're going to get squeezed and you're going to get into drawdown, but that's your job. That's what your bank balance is there for. It's your bankroll. You walk into a casino with £200 in your pocket. Are you worried if you put $10 down, 5% on one blackjack hand? No, because you're gambling. So why do you do it when you're trying to earn a living out of trading? Basically, what you're saying, if you're doing that, is you're a professional gambler. And it's not what the banks do. Anyway, that's the bootcamp done. With trading such smaller volumes. Yeah, I mean, this is, you know, just like I couldn't. Does that bother me? No. Have I got a stop on it? No. Could I care less if this goes up here? No. Why? Because what's the worst case scenario? I'm going to lose $45 out of a $30,000 pound account. I couldn't give a monkeys about that button press. It's insignificant. Doesn't matter. If you're risking 1% of your account with that button press, you've got to think really hard about it. I don't care because it doesn't affect me, does it? Psychologically, I'm not impacted whatsoever by that button press. Robbie, all these questions are answered in the bootcamp videos. Yeah, so I quite like going through the bootcamp stuff. It's good. It's good to just keep going through it live as well. Go and watch all of them 3 times over and then ask questions. Yeah. Okay, let me tell you, when I lost 30k in one trade, I was short in August last year and the market kept pushing for 4 weeks in a row and one position had 120 contracts. And I had to cut all my loss, all your positions, yeah. Yeah, over leveraged. It's just over leveraging. It's just, but that's what we're taught. It's not, you know, it's not anybody's fault. It's your eagerness to earn a Ferrari. earn a Lamborghini, because you see the adverts, and the whole thing is just driven by these idiots. You know, I have no problem with Greg Secker. He's running a good business. He's a very good businessman. I'm sure he was a very good trader. I've never looked into his background or anything, and I'm not worried. You know, he does his thing. Other people do their things. The thing that I don't like about his marketing is he is in luxury swimming pools, driving Rolls Royces, getting on private jets and helicopters. His whole perception is he's a trader, and that's what traders are like. I'm a 48-year-old bloke sitting in a box room in a semi-detached 4-bedroom house. I've got a Porsche, but it's an old one. I'm not that. That's what a real trader is. Someone that pays their mortgage and needs to earn 5 or 10K a month to pay the bills. Yeah, you don't do that by risking 1% or 2% on every position that you put on. That's the real world. The problem is the advertising tells you the other, and the other is not happening. There is no brain surgeon in the world that has not spent 10 years learning how to become a brain surgeon. Why do you think you can become a trader with an equivalent skill level requirement in a couple of months? It's just not possible. Not possible. Just not going to happen. Everyone can have a lucky run, though. And we had some lucky ones last month, didn't we? Okay, cool. Then if you are only losing $45, then you don't care. Then how are you cracking funded accounts? As you're profiting 45 and losing 45, it's impossible to get a 10% mark a month. Yeah, I don't position trade on funded accounts. I scalp funded accounts. I scalp funded accounts. I'm trading like this. Sell stop under there, stop above the high. I'm doing exactly what I'm telling you not to do. That's how I trade funded accounts. I scalp. But I blow them. I blow them regularly. Yeah, because I can't keep it up. I can't keep it up because I can't control the market. You got to realize that when you hit the sell button there, if I put a pending order under that low, it's either going to do one or two things. It's going to break like that and get me to a point where I'm happy to take a profit, or it's going to get me in and stop me out. Yeah, I have no way of controlling which of those is going to happen at all. Yeah, you can't, can you? Because you're not in control of which way these candles go. If you have a system with a 50% strike rate, yeah, that's great. If you have a 2-to-1 risk reward ratio on that system, that's great. But you cannot control how many losses you get in a row, right? So if I've got a 50% strike rate and I risk 1% per trade, and the 10 trades I take on my prop account go loss, 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 win, 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 with a 2-to-1 risk reward, that's brilliant. But what's happened is I've blown the account because I've hit my max loss limit. Yeah. Even the best strike rate in the world is going to have a losing run. The prop firms know this. This is why you have a daily loss limit, and this is why you have an account loss limit. They know that there isn't one trader under the world that isn't going to go into 10% drawdown at some time, because the market is just not going to let you have it. It's going to stop you out. You're going to lose. And you're going to lose multiple times in a row. Aussie, New Zealand. Why do you think I've got so many positions on? Not because I fancy getting myself into a ton of drawdown. It's because every time we got a decent reversal happening, it looked like we were going that way. All of these positions are wrong. But as it stands at the moment, I'm sitting in 5% of drawdown and I haven't lost 8 to 10% of my account. The market knows this. The prop firms know this. You will stop out. If you try to long Aussie New Zealand and mean revert it, you've blown your account. So you can't position trade. You have to scalp. This is why I say, you know, I've got multiple funded accounts. I've got multiple evaluations I'm usually doing at the same time, because I'm going to blow these funded accounts. My job as a prop trader, if you like, is to spend X and make Y, right? So if I spend 5K on evaluations, yeah, let's say I do 10 evaluations. If out of those 10 evaluations, I get 3 funded accounts, yeah, all I've got to do is trade one of those funded accounts up to more than 5K in profit and stop. Wait for payday and then withdraw that money. I am a profitable trader. Anyway, there you go. So thanks for your participation, Robbie. Always good to have new faces and asking questions. It's good to go through the bootcamp again, which is pretty much what we've done today. Right, I will leave you there. Nothing much is moving at the moment. Pound US dollars just gone up and down in the last couple of hours. We've gone nowhere. Aussie, New Zealand, pretty much the same thing. We've pushed up, we've pulled back down again. So hoping that's going to continue. The DAX that I'm in is doing pretty much the same thing. Whoops, let's change that over to the DAX again. So the DAX is just basically pushed up to yesterday's high or yesterday's New York high and hovered. So there's nothing much going anywhere. Still got no ADRs, still got no RSI extensions, just flat. So we're waiting basically for something to happen. Sitting here, bored. But anyway, that's what we do when we're bored, isn't it? We just talk rubbish. I'll be back tomorrow morning, same time, 7:50. Hopefully we get some movement today, but obviously the problem today is we haven't got any news to drive. So I've got a feeling unless anything kicks off with the elections and we get some big movement off of the US dollar, I think that's really the only time we're going to get any movement today. We'll see what happens in New York. New York might open and give us a bit of a flurry, but and then obviously we're flat tomorrow, no news again. So we're waiting for CPI figures on Thursday and hopefully we'll get a reversal then. We'll see. Thanks, Diamond. As usual, you rock. You all rock. School of Rock. But yeah, it's just boring, isn't it, when it's like this? I really should start paying attention to these opening range breakouts and trying to hold them. I'm going to do some more back testing on the ORBs because when they work really well. The trouble is in my testing, when they fail spectacularly. And it's just you just never know when an opening range breakout's going to work. And I think it's something to do with distance. When you get the ORB in the middle of a range and we've got actually somewhere to go, I think that's probably what needs to be tested. Not taking an ORB if it happens here with a high there, but taking it if it happens there. So if we've pushed down a lot and we get an ORB to the high, that might be what we need to be thinking of taking more, but I need to do some more testing on these. But strategy works, but again, like everything, in my testing, there's been a lot of drawdown on them because they fail spectacularly multiple times in a row when the market's a bit quiet. But no. Anyway, I will be back tomorrow morning. If you need anything, come in the Telegram group. I will be in there. Yeah, I'll let you know if I take anything new, but I don't think I will because nothing's setting up and I've got plenty of exposure on. We've got nothing hitting, but if we get any ADRs, I might look at some ADR reversal scalps, but there's nothing much today. So. All right, have a good day, everybody. Hopefully you can make some money and I'll be back tomorrow and see you then. And if you've got any questions, fire away because it's always good to do them, as we know. All right, guys, have a good one. I will see you in the morning.